A very good morning to one and all. On behalf of SRCF, I say, warm welcome to all of you for the secondary sessions on provisions relating to place of supply. Now let's welcome with warmth in our hearts and with a big round of applause, CA Mr. P.T. Raji on the stage, please. So can we have a present on stage, please, sir? Now with the permission from all of you, may I request Mr. Sitapathi to step on the stage, please. He will take us through the profile of CA Mr. P.T. Raji. After that, our lecturer will take over the session. Thank you all.
Good morning to all. I have the honor of introducing our speaker, CA Rajiv, PT, BBA, FCA, who is going to educate us on input tax credit and provisions relating to place of supply. Shri CA Rajiv PT is a fellow member of the Institute of Chartered Accountants of India and is a partner of Rajan Chakravarti and Associates, Chartered Accountants, Chennai. He is qualified both as a Chartered Accountant and Company Secretary, and he has also completed his bachelor's degree in Business Administration with the first rank from the University of Calicut. He had also secured scholarship from the Institute of Chartered Accountants of India throughout his Chartered Accountancy course for his merit in academics. He ventured into professional practice after successful employment stints in the audit and assurance departments of KPMG India. He has specialized his practice in GST and is providing GST advisory services to some of the big business conglomerates in India having over 50,000 crores annual turnover. He is a regular speaker in the in-house training of the firm, and he has also presented papers on GST in various business forums and MSME associations. He has conducted many corporate trainings on GST to impart the knowledge of the biggest tax reform in India. Thank you.
Thank you, sir, for the warm introduction. Good morning to all. Good morning. Yeah. So today, let's start. Should we wait for other participants? No. Yeah, they let them join. So today, last time I was handling place of supply in the institute, and this time institute has entrusted me with one more important topic, that is input tax credit. So today I will begin with input tax credit, and after 1.5 hours or 2 hours later, we will start with place of supply after a small tea break. So all of you, now it's GST is almost 9 months, 10 months old, right? Almost 10 months old. 1 year, almost 1 year. Correct. So what happens is, during the last 10 or 11 months, the kind of problems which all of you would have faced would be tremendous, right? The confusions, because it's a newborn baby, right? Newborn baby, we don't know what is the character which inculcated to this baby, and then how it will respond, how it will react, and what nature of what is the nature of this baby, we don't know anything. So when we started, when the GST suddenly got introduced, many people had the confusion on many topics. One of the major topic was input tax credit. Still, I'm sure that many of you, including me, not clear on particular cases. That means, there are litigation prone areas, there are confusions on particular topics, including, I will tell you one of the recent examples. Have you heard about CMC Limited? The cash and carry van. The ATMs and all, refill cash by this entity only. They have applied for advance ruling recently. They applied to advance ruling saying that whether that CMC cash carry van can the company take the input tax credit on that? Even advanced ruling authority also got confused. The company got confused, that's why they approached advanced ruling authority. They also got confused. They referred to the appellate authority because they could not take the decision on that particular topic. So that is the level of confusion. Even we are not able to do it, professionals were not able to do it, then they applied to advanced authority ruling, they also were not able to do it, they submitted to appellate authority to decide on this particular issue. So all these are part of my presentation. I'll take you through. There are a lot of confusions also from the employer-employee relationship, whether ITC can be taken on the cab rent paid, and cab is also not defined anywhere. So there are a lot of aspects which I think, after the session, what I try to make it is like, I will try to confuse you to the extent possible, and finally after 1.5 hours, we will come to a conclusion whether what exactly we have to learn from this particular session. Generally when I make a presentation, I generally try to break the conventional understanding of GST. That means we have an understanding on GST and that I will try to break it. So before commencing the presentation, let me ask you a simple question. All are eligible, all are big professionals here, I know, but still it's a funny question. Who is the king of a forest? It's not a GST question, okay? Who is the king of forest? There is no doubt about it, right? Please understand, ITC is the king of GST. If you know ITC very well, take it from me, your 80% of the problems are over in GST. 80% of your problems are over if you know ITC very well. Why I am saying 80%? From where this guy is taking this particular statistics? If you look at the last regime, any indirect tax regime for that matter, you can see 70 to 80% of the litigations are on ITC only. So now you will be understanding why this topic is very, very important. And when they allotted the topic, I requested SARC to give the morning session itself. Because post-lunch, if I take the session, it will be very difficult. I know that ICA is also providing good food also in the afternoon. So it's very difficult to handle the post-lunch session. So now, this ITC, we understood the importance. Why so much of litigations on this particular topic? Any idea? Why so much of litigations? Why 70-80% of the litigations on ITC? Now, we are going to face this litigation. Why so much of importance have been given to this particular topic? Any idea?
No, the best part is every government, the only place that they can levy tax on the indirect front is only the ITC.
What's your good name, sir?
Ramesh.
Ramesh sir is saying that department can make money if they disallow input tax credit. This is a huge chunk of area for the department. Is this view correct? He is absolutely correct. There is no second thought about it. Yeah. You would like to say something?
Also in the government, the entire thing is the most affected industry is the cigarette industry.
Yeah.
Budget after budget, you always have this community which is always affected.
Yeah.
That's one place where they keep on charging
Yeah.
taxes. So they have to find out more and more solutions for this.
Yeah. I will add to your point. The department where we have to be very careful. What are all the litigation prone areas? You just think from two aspects. One aspect is where the department will get the revenue. Where? One is if they disallow the input tax credit, ITC, which you have already availed. Two, the company will say it is exempted, but department will say it is taxable. These are all the two areas where department and then the assessee will have dispute all the time. All the time we'll have dispute. We'll say that either we'll say that it is exempted, department will say it is taxable, or we'll say it is taxed at 5%, department will say no, it is taxed at 28%. So these are all the areas. So when you reduce to 2 points, one is on the revenue aspect, when the company is charging GST, and that, always companies will do a lot of research and then the expert opinions and then come to a conclusion. So generally the possibility of dispute on that particular area would be minimal. But input tax credit, it's coming on a daily basis. So you cannot take an expert opinion on a daily basis. So I'll tell you one of my recent experience where one construction company, they are into ground engineering. They do the Kochi Metro, Chennai Metro, and all this Bangalore, the Delhi Metro. They do the ground engineering. Recently, what happened is they requested us to do the audit because they have branches across around 18 states across India, and they are doing very huge revenue, almost 1,000 crores approximately. So the CFO would like to know what is the impact of GST on this particular company. Now we started somewhere in April. They requested us to do the audit in somewhere in April. We started from July to March. Now, surprisingly, this company had a huge problem on ITC to the tune of approximately 20 to 30 crores. 20 to 30 crores. Huge impact. You know what is the problem? You know what happened in that particular company? They are all qualified people running the company. There is no issue with respect to ITC. Invoice is available. Credit is also reflecting in the input tax credit ledger. There is no issue. There is no issue with respect to that company as far as the CFO is concerned. Everything was fine. Whoever is paying the credit, they were paying credit. Some people were not paying, but after rigorous follow-up, they got it. But there was a technical problem in that particular company. So before explaining that issue, let me ask you, what is your conventional understanding on input tax credit? How to take input tax credit? What are all the requirements? What are all the conditions? You don't have to tell me exactly what is there in 16(1) and 2, but just tell me what are all the requirements for taking the input tax credit. I want your feedbacks just to understand what is your conventional understanding on this. Yes, sir.
Related or used for business.
Yeah. Excellent. Correct. It should be used for the purpose of business. Okay, fine. Next.
There should be a tax invoice.
Okay, excellent, madam. Yeah, there should be a tax invoice. That means tax paying document, to be very precise if I say. There should be a tax paying document, correct?
Before that, you should be a registered person under GST.
Absolutely correct. He should be a registered person.
But the tax invoice should contain the seller registered number as well as you should mention the purchase buyer GST number.
Okay. He's saying that some particulars are required, like supplier name and then tax component and other things. Excellent.
And he should have uploaded the invoice in GST portal.
Absolutely. It should be reflected in the electronic credit ledger. Then?
Not be part of ineligible credit.
Okay, absolutely correct. It should be, if you have to remove all the ineligible credit. I'm very happy that I'm getting a lot of answers. I'm really happy. I'll be always happy when I get a lot of doubts from the audience and a lot of response from the audience, because we'll make it more interactive. I have a lot of PPTs, around 89 slides are there, because I just wanted to convey as much as knowledge as possible within this 1.5 hours. Let me try to my level best to convey that knowledge to you. Yeah, then that's all. With these 4 conditions, you can take input tax credit.
HS and goals.
Sorry?
HS and goals. If it is service SAC goals should be matched.
Okay. He's saying that HSN code should be correct. Then only you can take credit. Then? Okay. So let me summarize. So what we got right now is, there are a couple of points like, it should be used for the purpose of business. And madam is saying that there should be a tax paying invoice, tax paying document precisely. And another gentleman is saying that there are a couple of particulars which are required. See, what happened in this company is, company got an invoice, company got the credit in the electronic credit ledger, but there was a problem here. See, look at this particular rule number. Rule number 36.2 says all the applicable particulars as specified in the provisions of chapter 6, that is for the tax invoice, debit note and credit note, are contained in the said document. So if you get a tax invoice, not sufficient. You have to ensure that all particulars which are required to be disclosed in that particular invoice are disclosed and then give it to you. How many of us are checking this? This company got into trouble because of this rule only. They got invoiced, but they were not mentioning place of supply, which is required as per rule 46. Place of supply was not mentioned. Whether tax has been paid under reverse charge mechanism or not, that has to be disclosed in the invoice. That was also not disclosed in the invoice. Vendors, you cannot manage all the vendors across India, right? So they were getting the invoices. Generally, some of the vendors, what they do is, it's all construction industry. All small players will be there as vendors. They will just take one invoice from Google, and they will just type information as applicable to them. They will just modify it and then send it across to the clients. Now what happens is, because of these couple of information which are prescribed as per rule 46 is not available in the invoice, we said you cannot take credit. Is this logic correct or not? It's not a logic, it's a law. Is this correct or not? Is this view taken by me or by us, is it correct or not? Correct? It is absolutely correct. It is as per the law. We said you cannot take the credit. So now they got into trouble. Almost 20 crore issues are there with the company, and now they are trying to sort it out for the last 1 year. What is the best they can do? Let me ask you honestly, how many of you have verified your own invoices? Let me tell you honestly, I did not verify my own office invoices for this particular provision. Because ours is a CA office, we don't have too much of credit. Generally, we charge client and we will have less input tax credit. Majority of our cost would be employee cost, that too also article assistance. So it will not be a big cost. How many of you have verified this particular invoice, particulars in the invoice? To be very honest, nothing wrong in it. Even I did the mistake. Everybody did the mistake. See, to understand this provision, you have to read, right? You cannot read all 5 laws at a time. All IGST, CGST, SGST, compensation says. It took almost 4 months to me to understand all those things. So even I was comfortable only after, say, somewhere in September, October only, after all law came into the picture. It took 4 months to me to understand all 5 laws. So nothing wrong in saying that, we did this mistake. How many of you have verified this at your office? Sir? Yeah.
My doubt is that after raising invoice, then only debit and credit note will come into the picture.
Yeah.
So if there is no debit note, credit note, how can we mention in that invoice itself?
No, sir. Debit note, credit note are different tax-paying documents. That has nothing to do with the invoice. Tax invoice is different. Debit note is different. Credit note is different. There are different rules, different provisions for these 3 tax-paying documents. The question is only tax invoice. Here the subject matter is only tax invoice. On the tax invoice, the prescribed particulars were not mentioned. Now, because of that, the eligibility, that credit is got denied. Now?
Sir, I am buying a product, they are mentioning everything.
Yeah.
They have uploaded the invoice.
Yeah.
And we got the credit, which is reflected in the
Absolutely correct. Yeah.
We take the credit, but in that case there is no debit note and credit note. Then how it is?
No, sir. Your debit note, credit note.
There is nothing. We have everything is closed.
No. Let me just clarify you. You will have, when you purchase, that means if there is an inward supply, you will have only tax invoice.
Yes.
That is separate.
Yes.
Then if there is any price increase or something, there will be debit note.
Yeah.
There will be a decrease in a credit note.
If there is reduce anything to be reduced, credit note.
Correct. These are all different transactions altogether. Now we are talking only about tax invoice. So in the tax invoice, we have this issue. So assuming that I'm a chartered accountant firm and I'm issuing an invoice to you, I forgot to mention place of supply. Will you be able to take the credit That is my question.
Based on the supply only, that verification came to place, no? Because that we have to check, no? Whether the supply is from outside the state or in the.
Yeah, everything is pakka. Everything is pakka. Even they have charged IGST or CGST, nature of supply also they have determined correctly. The only question is, I am a chartered accountant firm, issued an invoice to you. I forgot to mention place of supply in that invoice. Will you be able to take the credit? That's only very simple question which I am asking.
But we have to check it.
Absolutely, it is not practically possible, sir. Let me tell you, it is not practically possible. Is it practically possible to verify? You have n number of items to be disclosed in an invoice, correct? You have n number of items. Can you do a checklist? Can you prepare a checklist and do that every time? Some companies are having 3,000 invoices in a month. As input tax credit, invoices, inward supply invoices, they have around 3,000. How do they do that? It is not practically possible. Now, what is the solution? You cannot, once the law has come, even if it is not practically possible, you have to find a solution to it. Finally, what we have come to a solution is, take out all the major vendors, take their last invoice, see whether it is complied with the invoice rules. If it is complied, happy. If it is not complied, send it back to him, ask him to give a new invoice, including the particulars. Or if it is possible to get it signed from them, like place of supply or something like that, if it is not mentioned, mention that and then get it signed from the client. So you have to find out, you have to draw a line somewhere, right? You cannot leave it blank. Once it is mentioned in the act, it is required. Now, this, yeah.
Once it comes in electronic ledger, sir, they will be paying it down.
Yeah, absolutely.
Then how you are saying that they have to check it down?
That is what I am saying. 36(2) clearly saying that even if it is credited to your electronic credit ledger, even if you are in possession of tax invoice, the tax invoice should have all the particulars as mentioned in Rule 46. If it is not there, you are not eligible. So what will happen? You now see, it's like a silent poison. What is the beauty of silent poison? If you take it, you will not know it. After some time, only suddenly that will get burst. So let me compare this particular rule 36(2), one of the most dangerous provisions in GST. Why I am saying is, it's very silent. Nobody will notice it. When there is a GST audit, department will find it. They will get a big chunk of money out of it. I'm sure they are recording it. If any department officials are watching this, they will definitely come to take out this particular point when they come for the audit. So be careful. Even if it is, to clarify your point, even if it is reflecting in your electronic credit ledger, that is not sufficient. Even if you are in possession of tax invoice, tax paying document, not sufficient. 36(2), as long as it is there, as long as it is not repealed, you are in trouble. So do this exercise, please do this exercise, otherwise you will have year-end problems when the department officials come for the audit. When our own chartered accountants come for audit, they will make an observation and will qualify that you have to take a call. But when the department officials, when they come, they will not give you any kind of mercy. Correct?
Sir, this place of supply,
yeah.
vendor's address alone is enough?
Sir,
What is the place of supply?
no, actually in the invoice, in the invoice rules, they are saying address of the recipient and they are saying place of supply. So in my opinion, two different wordings should be there to differentiate these two. So place of, because address will not determine your place of supply. See, when we take place of supply, we'll clarify your point on that. So address will never ever determine your place of supply. So place of supply should be there as a separate point. So you saw this picture. This is why it is very important. Correct? We will pull it to this side. They will pull it to the other side. There is an accumulated GST. Beautiful picture, no? Makes sense, right? This is what the department will do, right? This is what we also do. We are in this side, and obviously I will take tax assessee as well as the chartered accountant. Both will be in this side. And the department will be on the other side. So let's see who will win. So my presentation today will be, the session overview will be like this. I will be telling you what is the relevance of input tax credit. and relevant statutory provisions. And I have a lot of illustrations, I have a lot of case studies, I have a lot of case laws, I have a lot of advanced rulings, authority of advanced rulings, because we regularly follow up all these case laws, advanced rulings and all, and see what is the impact on GST. And relevant statutes, if you see, the CGST Act, section 16 to 21 deals with input tax credit. And I have covered a couple of definitions which are mandatory, because if you want to learn some language, how do you learn? If you want to learn some new language, say for example Hindi or English, if you want to learn a language, how do you learn? What will you start with? Speak, correct. What will you speak first? You need to understand the words, right? Correct. You need to understand the words. When I started learning Tamil and when I started learning English and all, I started with vocabulary only. The definitions are like vocabulary. Without vocabulary, you will not be able to make a meaning out of the sentence. So very simple. So we have couple of basic definitions, and we have section 16 to 21, which is talking about input tax credit, and we have input tax credit rules, that is chapter 5 ITC rules. It's starting with 36 and going up to 45. Let me ask you one thing. These rules, ITC provisions are always there in CGST Act. But does it applicable to UTGST? Does it applicable to IGST and all? IGST transaction. This input tax credit rules are applicable to IGST? Yes? How does it be applicable? Because if you go to IGST Act, you cannot see all these provisions. You cannot see provision. IGST is hardly 20-25 pages, that's all. The entire Act.
They will say it's defined in CGST.
Absolutely, sir. Your good name, sir?
Alexander.
Alexander sir is saying that it is already give a reference in IGST Act. He is absolutely correct. See, section 20 of the IGST Act says, if you want to know ITC rules pertaining to IGST, go and refer CGST Act. And if you want to know, in UTGST also, section 21 says, if you want to know ITC rules, go and refer CGST Act. We are very happy. We don't want to run around. We need to read only CGST Act to understand the input tax credit. Input tax credit provisions and then the rules thereof. And if you see the CGST Act and SGST Act, you can see this same provisions, it's verbatim. Okay, in SGST Act 16 to 21 is verbatim, same only. So you don't have to again refer SGST Act. Now, I just mentioned what are all the relevant statutes. The entire, all these definitions are very, very relevant for us. And relevant statutes, what are all the rules and other things, I just summarized. Now, whenever I make a presentation, I have my own flow actually. So, in this, you can see that I'm starting with definitions. And before that, I had a word with Vishwanathan sir before I start the presentation. So he showed me the material also. In the material, the institute has shared institute presentations. So I request SIRC to share my presentation to all the participants. Every time I request, I don't know whether it is reaching to the audience or not, but at least if you can ensure with SIRC, it would be great. Because from my side, I am ensuring that, I'm forwarding to them and then they are forwarding to the recipients. Because this will be a good source of information for all of you. Because a lot of information, a lot of litigation prone areas are being discussed in this particular slide.
We'll have a WhatsApp group as we had for advanced.
Yeah, definitely. She was there in the advanced group, GST group. Yeah, definitely. So definitions. Second is eligibility and condition for ITC. And we have blocked credits. And we have reversal of ITC. We have availability of ITC in special circumstances like merger, demerger, and registered person become exempted. He was taxed under section 9, became 10, 10 become 9. All these issues will be there. And job work, ISD, and banking, financial institution, and NBFC. How many of you are from banking industry here? Banking, financial institution, or NBFC? How you are, sir? Okay. Happy that government has given you some sort of concession in terms of ITC. by giving you 50% by way of taking 50% of the eligible credit. But we'll discuss in detail. So what are all the definitions? Definitions are, first, one of the simplest definition in GST Act, that is ITC, Input Tax Credit. Very happy that it's very, very simple, right? You can see only one line. What is input tax credit definition? It says input tax credit means the credit of input tax. Nobody will forget this definition, right? Nobody will forget this definition. But now the trouble comes. Always Indian laws are like this. When we look at from outside, it will be very simple. Now let's go inside. It says input tax. Now we have to understand what is input tax. Now input tax means, you can see all the SGST, CGST, IGST, UTGST, all these are input tax. And they also mention that whatever tax paid under reverse charge mechanism, that will also be considered as an input tax credit. Now what are all the sections? You can see on the presentation that there are couple of 9394, 5354, 9394, 7374. These are all the reverse charge mechanism provisions under the respective act. So if you look at it, in CGST it is 9394, then in IGST it's 5354, and UTGST it's 7374, and SCST it's a verbatim, so it's 9394. And whatever tax paid on import also, you are eligible to take input tax credit. Now I have a doubt. Whenever I read the law, I look at from the other perspective, what are all not included. That is a typical way of reading the law. Compensation cess is there in this definition. Compensation cess, sir. Okay, you can see the presentation, right? Back seat, you can see, okay. Is there any compensation cess in this? Compensation cess. Will you be able to take credit of compensation cess? Compensation? But it is not an input tax credit, no sir. It is not defined in input tax credit. It is not at all an input tax credit. Any other views? In my view, it is not defined, so you cannot take it. But in the industry, everybody is taking it. Why they are taking it? It is not an input tax credit. I have taken the entire definition. I have not missed out anything. Compensation is an input tax credit. As he rightly mentioned, it is not an input tax credit as per this definition. 262, it's not qualifying, but section 11 of the Compensation Act, GST Compensation Act, clearly says that compensation says the input tax credit can be availed and it can be utilized only against compensation cess. That section is saving us. Otherwise, gone. Otherwise, gone. Because when they drafted the law, compensation was not there in their mind. Later only it came. Now, what is input? We have input, input service and capital goods. Input means any goods. See the difference between two. Let me summarize without taking you through the complete definitions. Input means goods. Okay. Input service means any service. Capital goods means capital goods. In the input you can see that other than capital goods. Very simple. You understood? Input means other than capital goods. Input service means service. And capital goods means anything other than input. That means capital goods is defined actually. If you look at it, goods, the value of which is capitalized in the books. So that is also defined. So first you have to see what are all not capital goods will be falling under the category of input. So I'm not spending too much of time on that. I hope you would have understood. ISD, input service distributor. When you have a common credit, sometimes you will not be eligible to, you will not be able to distribute it. For that you have to take a separate registration called input tax service distributor. Now we have a big definition, business. Because without understanding this, the entire ITC may not be able to understood in complete manner. Why? It is saying used or intended to be used for the purpose of business. So business has to be defined. It's a big definition, so if I start reading it, it will be boring. So I'll just tell you the crisp of it. Any trade, commerce or in manufacturing, profession, vocation, all these category, anything you talk about it, whether it is for pecuniary benefit or not, that means for relating to a consisting of money or not, even if there is no money involved in it, that is still considered as a sale, business. And then second thing would be in this particular definition which I would like to highlight is, you look at C, definition C says your volume, frequency, continuity, regularity are not relevant. Out of so much of definitions, so much of F, it's going up to I, why am I repeating or why am I giving so much of importance to the points number C? You know why? Most of the companies are giving cab services. That is not their business. Correct? That's not their business. Will they be able to take the credit? Can that be considered as a business? Department will come and say, boss, that's not your main business. Your main business is software, export. You're doing it only one time. This is not even 1% of your total turnover, what you are collecting from the employees. Food, canteen expenses, amount recovered from the employees. Again, department will come and say, boss, it's not even 1% of most of the companies in Sri Perumbudur, if you know, as per Factories Act, they will be having a canteen there. So they will be recovering the money. So when they recover the money, the question would be, they are into manufacturing, not into canteen business. Will they be able to take the credit? So this is a good decision or good, welcome point in the definition, because if you look at the old regimes and all, they say only for providing output service, not for your business. It's for output service. There ends. Now here we got a bigger definition. So most of the categories, most of the input tax credits will fall into it. And what are all the conditions for taking input tax credit? Eligibility, the eligibility and conditions. What is the conditions for taking the credit? What is the eligibility and conditions? The section says 16.1 defines every registered person. Every registered person. So not all person, not all taxable person, not everyone can take the credit. What is the difference between taxable person and registered person? He is taxable under that GST, but he has not registered. For example, his turnover crossed 20 lakhs, but he has not registered. Recently, I come across one case. Turnover already reached 30 lakhs, 40 lakhs. He is unaware actually. He is a very poor guy. So he is not aware of this particular GST provisions and all. Suddenly he came for filing the annual returns now. The income tax return now. We found that it is already crossed to 30, 40 lakhs. So he said, you have to get it registered under GST. So he is a taxable person, but he is not a registered person. So he will not be able to take the credit. Only registered person will be able to take the credit. Now, subject to ITC rules 36 to 45. You ask me no. I have a tax invoice. It is you ask me. I have a tax invoice. It is credited to credit. It's a ECL, electronic credit ledger. It's all mentioned in 16.1. But look at that second point, which says you are eligible to take subject to rule for 36 to 45. 36 to only making the problem now. So 16.1, though it is saying only 3 or 4 conditions, you have to mandatorily comply with 36 to 45 of rule 36 to 45 of CGST rules. Did I answer your question now? Technically? Happy? Okay. Now, entitled to take credit of input tax charged. Let me take this definition in detail, because I don't want to just rush it and then go through it. I will take you one by one word by one word, what is the meaning of it. Why did I highlight? The previous point it says, and in the manner specified in section 49. Section 49 talks about how to adjust ITC, the payment of tax. Basically that section is for payment of tax, how to adjust it, whether I can adjust CGST against IGST, IGST against CGST, SGST, all this how to adjust it. That is defined in that. So it says subject to rules and section 49 payment, and entitled to take input tax charged. Why did I highlight it? Charged means what? Why did I highlight it? What is high funda in this particular?
Should not be registered under composition scheme.
Absolutely one. Then it should not be under composition scheme. He's saying because you have not charged me.
I mean, he should show that output tax as kept in invoice.
Absolutely correct. See, sometimes what happens is they will give you a lump sum invoice. They will say that 1 lakh. And later they will come to know that it is taxable. They themselves will pay out of their pocket, and then they will discharge their liability. Now, when they discharge their liability, you will get an electronic credit ledger, you will get the credit. Will you be able to take the credit? Will you be able to take the credit? Because the invoice say only 1 lakh. They have not separately charged the tax component. Will you be able to take credit? You will not, because it is not charged. Otherwise, you have to request for a revised invoice or something. Correct? Correct? No. There is no concept called revised invoice in GST. There is no revised invoice in the context of GST. I hope the invoice has already been taken or going to take. Invoice. Not yet? It is already covered in the topic. I mean the GST session. Yesterday it started, right? Not yet covered, right? Okay. Probably the faculties will be covering, you ask him. Okay. So, invoice cannot be revised. It can be revised only in one particular scenario when, because I don't want to just get into it, I will quickly finish off. Only one scenario where one person is liable to be registered within 30 days, he has to register. So today he is liable within 30 days only, he will get the registration assumed. So in that situation he will issue an invoice that can be revised. That can be revised. After getting the registration, he can revise it. That is only scenario in the GST Act where he can revise the invoice. Otherwise, he has to issue credit note or debit note, as the case may be. Okay? Yeah.
In that case, that company was doing that ground mining, that metro company.
Yeah.
That how company can be revised invoice? You found in that.
It cannot be. It cannot be. It's not a revised invoice.
Totally, you have asked that company to revise the invoice.
I'll put it this way. You should not record this in the, in the session. There is something which, I cannot tell in the open forum. Revise in the sense, it's not like a revised invoice. Same invoice number, everything will be there, and they will just add that particulars.
Same invoice number.
Yeah, same invoice only. There is no same invoice. There is no revised invoice. It's actually for your understanding, I just mentioned it. There are other ways also we did it to solve this problem. I cannot tell it in the open forum because department will catch me tomorrow for giving this kind of advices to help the assessees. So you understood that charge, right? On any supply of goods or services or both to him. What does that mean? Again, I have highlighted any supply of goods or services and highlighted to him also. What is high funda in this? It's only eligible. I will tell you a typical example which has happened few days back. One Japan bearing manufacturing company is getting merged with its manufacturing unit in Sriperambuttur. It's a retail unit, so it's running. It's having the retail as separate. I mean the trading as separate company, and then the manufacturing as separate company. It's a bearing manufacturing company from Japan. They decided to merge. Merger is going to happen. Okay. Now the merger order has not yet come, but the company themselves has taken a decision that let's go with the. Anyway, that fellow is going, that company is getting closed. So let's raise all the invoices in my name. So they started invoicing. So even we have issued some certificates, some audit reports and all. So they said, no, don't raise to that fellow, you raise it to me, to the trading company. We are going to get merged. I said, what? How can I do that? It's not your business. It's entirely different business. Both are different parties altogether. How can I raise an invoice on you? Then they said, no, we started already, management has taken a decision. I said, I can raise an invoice on you, but take it from me, you will not be able to take the credit because it is not for your business. Merger has not happened. If it is merger has happened and all, there is a separate provision in 17 where they say, after the merger you transfer all the input tax credit, but you cannot take the credit of the other fellow. Though I am raising and then giving it in his name, I don't have any problem. I am complying with the GST because I will say that the trading company has requested me to do the audit of that company, and then I have done it. So I have no problem. I am complying with the GST because he has given me a third party instruction. I have done it, I have raised it and given it to him, and I told that no, you will not be able to take the credit. So it should be used for the business of that particular person. Same scenario. Let me complicate further. If you have branches, assuming that there is a company in India, in Chennai, which is having head office in Chennai, and it has one more branch in Bangalore, and Bangalore is conducting some training program or some business promotion activities in Taj Coromandel right away here, right? So Taj, what they will do, they will charge CGST, SGST. Obviously Taj, Taj will give CGST, SGST because place of supply is the place of the immovable property. Now, Bangalore branch, can they take the input tax credit of this? They cannot, right? They cannot, because they are charging Tamil Nadu SGST and CGST. Now, our people are brilliant fellows. No, the branch in Chennai will say, no, you don't raise to him, you raise to me, so that I can take the credit. Brilliantly they have taken the credit. Department will come and ask, what is the program which has happened in Taj? They will clearly say that business promotion activities of Bangalore branch, they only coordinated, they did everything. We were only merely spectators. Then department will say, boss, that expenditure is incurred for the purpose of his business, not for your business. Now you may be asking, sir, both are same branches, it's under the same pan, it's all under the same company. Why are you distinct, the two branches separately? Under GST regime, all branches are considered as a distinct person. Distinct person means all are third parties. I have nothing to do with Chennai branch, has nothing to do with the Bangalore branch. Bangalore branch has nothing to do with Pune branch. All are independent. Only common nature is their SIN will be same, PAN will be same. Because registrations are different, they are all different parties altogether. So you have to be very careful. This is one of the grey area which I feel, because most of the companies, branch, inter-branch transactions and all, they are not recording it. It's very difficult to record. I'll tell you one of the examples. One construction company is moving their piling machines to another site actually in Gujarat. See, for example, the piling machine is moving from their yard in Madhavaram. It's moving to Gujarat site. This is moved and it came back also. Nobody noticed it. Later I asked what is this transaction is all about. They said, we just moved it, it's our own machinery, we just moved it and then came back. When I told that you have to charge rent, either you have to charge rent or you have to consider this as a transfer of fixed asset. You have to, considering the nature of transaction, you have to take either it is a movement, it's a transfer of asset to the other branch, or it should be considered as a rent payment. When I told this, they said, we will not agree because this is my own machine. Why should I pay rent to Gujarat? Gujarat is also mine. What is the big deal in it? Why should I? It's only book entry. All these things they were saying. It was very, very, very difficult for me to convince the director of that company. They are all educated people, no doubt, from IIT, IIM and all. It took, not exaggerating, it took 2 hours to explain to him that this is the scenario in GST Act. You have to charge. Then he was asking me, Rajiv, I was not charging in service tax regime. Why are you asking me to do it in GST? I said, that is nothing to do with this, sir. The law has changed. That is repealed law. It has gone. Now this is the position as well. You want to comply with it or not? I asked. Finally, it is your decision. They said, I want to comply with it. There is no doubt about it. Now they started charging the GST on the branch transactions also. Yeah, you have it.
Previous example, Bangalore branch, can it take the credit or not?
There is a solution to it. They cannot take the credit directly. The only way is, the Chennai branch has to register as ISD and then distribute the credit to them. That is the only solution. Otherwise, they cannot take the credit because they will be charging CGST, SGST. In your registration certificate, you can take only IGST of the other states. So it will be a lost credit. Okay.
Sir, I don't have branch
branch in Chennai.
Yeah.
But I'm operating from Bangalore.
Then it's
So
gone case.
I am conducting but I have an office here, but not registered.
You cannot take, first condition itself is registered person. First of all, you cannot take credit. Even if it is registered, you cannot take the credit because it is pertaining to the business of the other person, the other branch. There are a lot of words used like free flow of credit, right? When we heard GST in the initial time, when the GST introduced, free flow of credit. Second is destination based tax. Did you see destination based tax in anywhere in GST? Did you see that? I didn't see it. Got quite surprised when I read all the 5 laws. I could not see in IGST, neither in IGST, SGST or CGST or Compensation Cess Act. None of the act I read it. I read all this act, but none of the acts I could find this particular word called destination based. Last presentation, one participant also was arguing, or he was putting it across his point. This is destination based, so it should be available. I said, destination based, nowhere. From where are you getting it? No, I heard it. Department, government, everybody was using the word. But I said, let them use the word. It's a communication, but in the act you can see only place of supply. So anyway, when we take the handle place of supply, I will explain that. Now, which are used or intended to be used in the course or furtherance of business. So it should be used for the purpose of business. Now business you all understood, right? So I am not taking too much of definitions. I want to cover more practical aspects. Credited to electronic credit ledger. So this is one of the conditions. You ask me, no, it's already credited to electronic credit. This is one of the conditions to avail the input tax credit. So even if you have a tax invoice, they have charged, everything is there, but they have not filed the return and they're not reflecting in the electronic credit ledger, it is not possible. One of the clients, they are into courier industry, they got some, their fund got blocked actually somewhere. So last week they called me and asked me, Rajiv, there is a fund issue, so can I do one thing like, can I file the return, payment I will do after 2 months later. I will do the payment after 2 months. Is that okay? Is this okay? Can the GST return be filed without paying taxes? Not possible, right?
Itself is not allowed.
Huh?
The online submission itself.
It is not possible. So I said it is not possible. So electronic credit ledger impact means the other party has to pay the tax and it should reflect in your credit ledger. That has to pay. He has to pay. He has to file the returns. Correct GST number should have been mentioned. A lot of conditions are there. Then only you will get the electronic credit ledger impact. Now, this I already discussed this case study. That this hotel Taj. So I don't want to take the case study as separately because see, don't look at the names, okay? Because whenever I create, these are all my own case studies. When I create the names, case study preparation is not a difficult thing for me. But finding the suitable name is very, very difficult. You know why? Somewhere it should be resembling some of the companies. But don't try to make out of it. That is irrelevant. Samurai Limited. A company registered under GST in Tamil Nadu has 2 branches, one in Coimbatore and one in Bangalore. This I already discussed. So anyway, I will just move on.
So one more.
Yeah.
Suppose a company is sending some marketing personnel to Delhi.
Yeah.
They stay in a hotel. Hotel charges tax.
Yeah.
So in that case, it will be local tax.
Yeah.
So then you cannot take credit.
You cannot take credit because when you move, when your employees are traveling, I'll add one more point to it. Very good that you asked. His question is very simple. Company is located in Chennai and the marketing employees are traveling to Mumbai and they don't have a branch there, and then the hotel stay, food, everything, accommodation, they will be charging CGST, SGST only because it's a immobile property. Wherever it is located, that would be the place of supply. His question is, what will happen to that credit? It is a lost credit. You cannot take the credit there. This is first point. Second point is how to solve it? How to solve it? You have only one mechanism, that ISD. Okay. Sorry?
They don't have a branch.
They don't have a branch. So assuming that if you want to take a credit, you have to register there as an ISD and then you have to distribute it. That is the only way. Third point is, I'll give you a solution. I would put it in this way, rather a practical solution. I told you one construction company, right? They have across India, they have branches. You know what happened initially? Their employees were traveling and they were not getting the credit because every time they have to give the credit, that GST number of their respective branches, right? 18 branches. Even the CFO doesn't know what is the registration number of Gujarat and then the Bengal, Kolkata and all. So what we did is, it may look funny, but this is what we did it in that company. We printed one card with complete registration numbers and then handed it over to all the clients. Said, if you are traveling in the respective states, give the GST number if that business is pertaining to that particular state. Because otherwise what happens is, all site engineers, all marketing executives in Gujarat are calling to accounts department and asking, what is the GST number of Gujarat? These guys are already fed up with the work, day-to-day work. Now they are asking a lot of doubts also on GST number. So they started doing this. Even I got a copy of it. When I recommended, it was funny. It was very, very funny. When I talked to a CFO also, he was also laughing initially. But later they found that this is the only solution. They implemented it and they officially handed over one copy to me. That card is also available with me. So this is how people are doing it. So when you have traveling, any executives are traveling and all, try to ensure that you are educating them and then giving them GST number. Sometime it would be a blocked credit. Sometime they will be charging IGST. At that time you can take the credit. Now one more point. I will give you one more typical example where, since you asked, I am just dealing with this. There is a, online hotel bookings and all, right? Hotel bookings, Yatra, then booking.com, Make My Trip, excellent. These are all excellent answers. You know what is the problem which they are all facing now? You know what is the problem they are all facing now? If this problem is solved, I don't know where the profitability of these companies, whether the profitability itself will be there or not, I don't know. I don't want to comment on this particular topic. You know what is the problem? When they are charging for the customers or the property, if it is located outside, this is an actual example of one company called Depot. I'll just show you that example. It's an AR ruling. This AR ruling which says, sorry, I think I just crossed it. No. Default Travels and Tours versus Union of India, court ruling. This is not a AR ruling, sorry, it's a Delhi High Court order which has come recently, and it says what this company is into booking hotels and all. Okay, so it is a business of booking tours and hotels packages for customers. They charge IGST because if I'm sitting in Chennai, they are registered in Delhi and then they will charge IGST only because as far as they are concerned, the place of supply is interstate supply and then it will be nature of supply is interstate, they will be charged IGST. But you know what is the problem? They are unable to avail the input tax credit of HGST and CGST charged by all the hotels across the states other than Delhi. How do they avail the credit? If it is a hotel, first there are two transactions in it. Depot will charge GST on the customers, they will charge IGST. But when they are charged by the hotels, they will charge Tamil Nadu SGST and then CGST. Or they will charge Kerala SGST and then CGST. Lost, credit is lost. There is no free flow of credit. Now what do? They don't have any solution to it. You cannot apply to AR because there is no question of law or fact or anything because nothing is to be decided. It's already clear in the act, you cannot take the credit. So they approached the Delhi High Court. Delhi High Court, it's all, hands are all tied for everyone, right? Once the law is passed in the legislation, even if you are a Supreme Court advocate, even if you are a Supreme Court judge, or even if you are in court or whoever it may be, everybody will be under the statute only. So, High Court said, we cannot do anything, but what I can do is, like, department should look at, represent this point to the GST Council and take an appropriate decision. So I am expecting that some sort of new rules or new provisions will come in this regard based on the recommendations of or reference of based on this court ruling of High Court, Delhi High Court rulings. So that will solve your problem. But as of now, there is no solution to it. I came to know that one of my friend he's also senior chartered accountant actually, and then he is representing the shipping industry. So they are also having this issue. Their ships will dock, start from Mumbai and dock everywhere in Tamil Nadu and other places. So everywhere they are getting a lot of credits, but it's all blocked credit, the same scenario. So they also made a representation to the ministry, finance ministry, by the shipping ministry. They made the representation through them. I hope all these things will get settled through GST Council meeting sooner or later. Now, utilization of, so we discussed all these points in GST 16.1. Now let me discuss the section 49. We did not discuss about 49. Rest are all rules, we are going to cover it. Now in 39, it says, ITC of CGST can be adjusted against CGST and IGST. The ITC of SGST, first you have to adjust it against SGST and then the balance with IGST. If you have IGST excess credit, IGST, CGST and SGST in this order. Any doubt in this? Is it clear? Is it clear? I'll make it further complicated. You have to read it. There are 29 or 30 limbs into it. You know why? You have to read it this way. CGST of Tamil Nadu, IGST, then CGST, CGST, SGST of the respective states. So each registration, it is different. So can I adjust the CGST of Tamil Nadu against the CGST of Karnataka? Not possible. So this is based on a registrant. Whoever is registered, based on that only. It's not a common word. First, initially when I read it, I was under the impression, when it came into July, I was also under the impression that only blocked credit will be there for SGST. But later when, in July first week itself, we understood that there is a big problem which is going to happen. Now, 16.2, it says, you should have tax invoice. What are all the requirements for availing ITC? You should have a tax invoice. This is under section 31 and then debit note under section 34, or tax paying or any other tax paying document as per rules. And received or deemed received the goods and services, tax actually paid to the government, furnished the returns. Tax invoice. I said tax invoice should have all the particulars as mentioned. What is this other tax paying documents? I know tax paying, I know tax invoice, I know debit note. What are the other tax paying documents? No, that is not a tax paying document. I mean, challan is a tax paying document, but for availing input tax credit, that is not equivalent to a tax invoice. Somebody is looking at the screen actually, so what are all the things? Debit note is fine. Credit note is not a tax paying document, yeah, but debit note, yes. Any other thing? Bill of entry, absolutely. When you import, you will get bill of entry only. Then you have reverse charge mechanism tax paid, right? Yes. Reverse charge mechanism tax paying document. Because as per the regulations, rules, you have to raise a separate invoice when you pay reverse charge mechanism. Then you have ISD invoice. I told you, ISD, when you have ISD, you should raise a separate invoice and distribute it. So these are the other tax paying documents. Receipt of goods. Very, very difficult. Correct? If you say that is difficult, I don't know how will you feel receipt of service. Receipt of goods is a mandatory. Second condition, if you see, received or deemed received the goods and or services. Receipt means, this is, don't quote me anywhere because these are a couple of my own interpretation, how I interpret it. The proof for receipt of goods is physical stock, then e-way bill, GRN, goods received note in the factory. I will add one more thing to it, fixed asset register, because it's not there. Fixed asset register also, it's a document, it's a statutory document which will show you whether the capital goods have been received or not. Receipt of service, very difficult, very difficult, correct? When will the audit, we'll do the statutory audit, right? How many of you are practicing here? Practicing, oh very good number of people. So, oh you sure? So, good number of people are there, and then when we do the audit, when will you consider that the audit is over?
The audit report is
Sorry? Signing of balance sheet, that's excellent, you are into practice, no sir? Excellent. So generally, if you look at it, sometime the sign off will happen sometime later, right? But we will put balance sheet date, one date, and then it may, 1 or 2 days. I'm not telling anything, right? It's recording actually. I'm saying that it's only 1 or 2 days there will be difference because of the documents coming and going, and so now you would be understood what I mean. Now, so the date of sign off will be the completion of service, but this would not be possible in many of the cases. I will complicate these things in the coming slides. Advance paid or supply of goods or services. Can the ITC be claimed? Advance received or advance paid. Can you take ITC on that? Can you take advance on ITC? Answer please.
Violates the previous condition.
Sorry sir?
Violates the previous condition.
Violates, yeah, absolutely. It's, you have not received the goods or services, so you will not be able to take the credit. Now, can I ask you one thing? I'll give you a scenario. You just tell me whether you have received the goods or not. I have imported the goods. I told you one bearing manufacturing company, right? That trading company, they do this exercise. They import the bearings from Japan. It will come to the customs port, and that goods will not come to their warehouse in Madhavaram. It will go directly to Toyota or Maruti or all these big vehicle manufacturing companies. Have you received the goods? Has this company received the goods? Can they take the credit based on the bill of entry? You understood the question, right? They have not received, there is no GRN, there is no e-way bill, nothing. They have not received the goods actually, physically they have not received the goods. Can they take the input tax credit? Please answer please. Yes? But one of the basic conditions is you have to receive the goods, right? But you have not received the goods. In my opinion, no, you cannot take.
So constructive possession.
Constructive possession. I am getting a lot of legal terms. Okay, constructive possession they are taking. See, there is one explanation, as you rightly mentioned, they are constructed in the act itself. The thing is, there is an explanation in the act. They said couple of things are deemed to be received. See, for example, in job work also you can see this. See, for example, I am located in Tamil Nadu and my job worker is located in Bangalore. Goods have to come from Delhi. Then I will say that you directly send it to the job worker. Why should it come to my factory and then receive it and then send it back? That's not a prudent decision at all. So in case of job work, in case of import, and in case of bill to ship to transactions, heard about it? In bill to ship to transaction, first link, I will ask one particular party to ship the goods to third party, but I will be invoicing it. So he will be invoicing me, but I have not received the goods. In these three situations, it's called deemed received. Okay, so you can take the credit. And receipt of goods in lots. I have a lot of doubts in this. Let me tell you, to construct this particular point, it took long time for me. When you read it, it looks a small point, right? What is there in it? It's received in lots. What is this big deal in it? I'll tell you the complications involved in it. Single invoice goods are received in lots or installments, entitled to take credit only when you receive the last installment. Assume that I am raising an invoice. I'll complicate this in further down in such a manner that you will not be eligible to take the input tax credit at all on this particular invoice. Okay. First scenario is, there is an invoice which says 5 installments I will send you goods. Okay. First installment reached, second installment reached, third installment reached, fourth installment reached, fifth installment not reached. Goods lost in fire or there was vehicle met with an accident. Will you be able to take the credit? First scenario. Everybody knows, if it is a lots, agreed, but final lot received, fine, no problem. But if it is not received, will you be able to take the credit? Fifth lot is not received. Tell me the answer. Fifth lot got lost, that's all. Met with an accident. They could not further supply also. They could not do the further supply also. Eligible to take credit? Yes or no? Yes. This fellow is confusing in the morning itself. Huh? So, I am not telling my view in this because there could be 2 alternative views which can be emerged. Law says you have to receive the final lot, then only you are eligible to take the credit. First view. Second view I can give you, no, because it is not possible to supply that final lot, so raise a credit note and then consider this as a final transaction and close it. There are 2 views which can be possible in this particular scenario. Second example. You received the goods, you made an agreement with them, they also supplied also. You entered into an agreement in March 2018. They said we will send you through 5 installments. They sent in 5 installment. You reach the final installment in somewhere in December. Okay, you received the final installment in somewhere in December. Will you be able to take the credit of this particular transaction? Because 16(4) of CGST says there is a time limit for taking credit for the invoice, which is nothing but due date mentioned under section 39 for the September month or the annual return filed, whichever is earlier. So, September month due date is 20th of October, you are supplying the final lot in December, will you be able to take the credit? Will you be able to take the credit?
Yes.
Yes. How, sir?
Because the section says only when the last installment is.
Yeah, they are eligible to take, but the section 16(4) says if any invoice, if you want to take a credit, it should be taken before annual return filing or the due date mentioned under 39, that is 20th of October, the due date is over. So now you cannot take the credit, it's lost. So when you do get into all these kinds of transaction, you have to be very, very careful. One is 5th installment not at all received. Second is, you received, but you received after the due date mentioned under 16(4). Because 16(4), sir, Alexander sir, 16(4), there is only one exception for taking the input tax credit on one particular invoice is that 180 condition, where if they pay it later, then they can take the credit. For that, 16(4) is not applicable. That is the only exception which is given. I have a couple of points like that. Insurance contract, AMC contracts, we'll come to that. Now, one more thing in lot. I ordered for 100 quantity, but I received only 90 quantity. Will this be considered as a lot? Will I be able to take the credit on the entire 100 or 90, or should I wait for the credit note, or should the remaining 10 quantity should reach my factory? I'll give you 4 examples. Now you tell me the answer. What is your logical answer?
Credit note only, sir.
Credit note.
If you are not able to get the material replaced, then I have to get it a credit note.
If they are ready to replace it, they are saying, see, I'll tell you, this is a practical example, I'll tell you. You know HUL, right? HUL, Hindustan Unilever Limited. They supply the surf and all these things to the distributors. Distributor will receive it, but sometimes they will receive shortage in the quantity. They will get 98 instead of 100, which practically happening in their software also. We are advising their software actually, not for this thing, for another company which is designing the software. So at that time, all these issues have come. So one of the typical example is this: 98 quantity only received. Now what to do? Can I consider this as a lot? Is it a lot, first of all? First of all, let me clarify, this is not a lot. Lot, how do you determine? It's based on your contract or invoice. So this is not a lot. So you can take the credit, in my view, you can take the credit to the extent of that 90 quantity which you receive. Remaining, either you raise a credit note or receive the goods later. If you are receiving the goods later, you take it accordingly. Now, not paid within 180 days. Yeah.
Now we are not going to receive the remaining balance, so we have to get the credit note.
Credit note, yeah, absolutely. You have to close that invoice, then only you will be able to take the credit. Or you have to the extent of whatever the goods you have received, you can take the credit. And remaining, you have to close that invoice, either by raising credit note or you have to receive the remaining quantity. Okay. And, yeah.
If I take actual quantity, actual credit.
No, you cannot. Because one of the conditions is you have to receive the goods. Have you received 100 goods?
No sir, for 98, can I take credit for 98?
90 goods, whatever you received.
If the
Yeah, you can.
seller is not giving the credit note.
Yeah.
In that case, what we have to do, sir?
No, you cannot raise a debit note. Somebody was saying, no, only the supplier can raise a debit note or credit note. So you cannot do that. It was possible in the old regime. That is why when we go for audit also, we have a lot of differences. The other fellow would have raised a debit note or credit note. We would not be even aware that he would have raised a debit note, credit note. All those are gone. Now only the supplier can raise a debit note or credit note. To answer your question, to the extent of 90 quantity, you can take the credit. But if you receive the remaining, whenever you receive the goods, you can take the remaining credit.
He is not in a position to supply.
You ask him to raise a credit note.
He is not giving credit note also. He is not aware of
That would be difficult, sir. This is something which you have to deal with your supplier.
I have to
You
credit note, sir.
see, what is your problem is only ITC, no?
Yes.
ITC you can take it only to the extent of 90 quantity, whatever you received. Remaining then you will not be able to. This will not come under lots. That's what my point is all about. It's not lot actually, because as per the agreement it is not a lot. So you can take the credit as and when you receive the goods. Now we have a danger provision again. This was not there in the earlier regimes, right? 180 days. If you don't pay within 180 days from the date of invoice, you have to reverse the credit. Let me tell you, this is a dangerous fellow. This guy is a dangerous fellow actually. What is the problem, You know what is the problem in this practical problem? See, when we did the audit also, we faced this problem. Most of the companies are maintaining their accounts based on invoice date and credit period, right? In Tally, if you see, they will book it on the booking date, correct? Assuming that invoice is raised on 1st of July, invoice is received on 1st of August, they will book it on 1st of August. Invoice date is 1st of August, that means, booking date is 1st of August. There will be credit period also, they will add in the Tally, it is possible. So it will be credit period also will be reflecting based on that. Now what happens is, look at this provision which says, if the recipient fails to pay the supplier of goods or services or both, the amount towards the value of supply and along with the tax payable thereon within a period of 180 days from the date of issue of invoice, not from the date of booking, not from your due date. The problem which we faced in that audit is, date of invoice is not available in Tally. So what you have to do, you have to literally sit and then look at all the invoices. Is that practically possible for auditors like us? Not possible. How do we do it? 5,000, 6,000 invoices. Our own institute is saying that sample basis. Will we do 100%? No, not possible. So what is the solution to it? What is the solution to it? So please note, it says date of issue of invoice. Now, it says date of issue of invoice. It's not saying that date of invoice on the invoice. It's not saying that date of invoice on the invoice, right? Is there any difference between date of invoice on the invoice or date of issue of invoice or date of receipt of issue invoice, date of booking in the invoice, date of credit due date? There are a lot of dates, right? You should not get confused. It's only the issue of invoice. But as per rule 46 of the tax invoice, they are also using the same word, date of issue of invoice. That means by doing that, you can interpret that whatever the date which is mentioned in the invoice will be the date of issue of invoice. Clear? So don't get confused. It's not booking rate. So when you go for audit, the main problem which you will face is how to take this. We have taken the aging to understand whether it is crossed 180. Practical problem which we faced is this is a construction company, because this is to receive it in the place, one particular place, and the project site, the project manager has to approve, and then the site engineer has to approve. It has to come to the site at later point of time. It will take 2 months minimum. So what we did, we understood the process, what they do. Then we took aging for 4 months, not 180 days, because it's not practical. On 4 months we did the aging. If it is crossing 180 days, then we were on a top-down approach, we were looking at the exposure. Now we requested the company to change the complete accounting. We said you also have to account the date of invoice also. Fortunately, it was new to me that in the tally, this is possible to do it. They called the technical person, tally person, and then they came and they said, yeah, date of invoice is also can be keyed in. So please note, when you advise your clients, or if you are doing it, please ensure that when you account your invoice for inward supply, you have to mention the date of invoice. Otherwise, you are inviting problem under second proviso of 16. Please be aware of it. Tomorrow department comes, they will ask, boss, you take all the 180 days. They will put back to us. They will not do any work. They will ask us to give their listing. Okay, so please ensure that this is an important section which you have to be aware of. And the beauty is, if you don't pay within 180 days, if you reverse it, 18% interest per annum has to be paid. 18% interest from the date of, no, 18%.
As in the case of refund 18.
No, this is 18% because it says 51. 50 subsection 1 says 18% only. So you have to avail, you have to do only 18. So now what happens is, now from that interest, from which date I have to pay? I have to pay from the date of invoice. Again, let me play around with these dates. Is it from the date of invoice, or is it from the date of availment, or date of issue, date of utilization? We have a lot of dates actually. Don't get confused. It says date of availment. Availment means the date on which I am taking into my electronic credit ledger. That means by filing my returns. So first point is 180 days will be calculated from the date of issue of invoice. Interest will be calculated from the date of availment. And what is the difference between availment and utilization? Availment means you will take it into your credit ledger. Utilization means you will use it for payment of tax. So this is from the date of utilization, and you have to pay interest. Now, sorry sir?
Not utilized, you need.
Still you have to pay, because it says 18% has to be paid from the date of availment. Availment is the moment you take it into your electronic credit ledger.
18% is number of days you are saying.
Yeah, number of days. It's actually saying per annum. So under the existing service tax also we had the same. So it's continuous, per annum only. Now, I got a lot of doubts in this. We had a lot of debate on this. How many of you are from construction industry? Any construction industry or anyone handling construction industry? Okay, I'll tell you that. I myself will tell the example. In the construction industry, there is something called defective liability period. Defect liability period, that is, the construction would have been done for 100 crores, but the party will retain the money. It's called retention money. They will retain 5% generally. The standard is 5%, they will retain this 5%. So 5 crores they will retain. They will pay only after 2 years, after the defective liability period is over. Now, the payment is not made within 180 days. What is your opinion? The credit on this 5 crores should be reversed, or what is your opinion on this? They will receive it only after 180 days, sure. Any opinion? I myself will tell you, because there are two opinions which are coming. One is, as strictly speaking, it is not received and you have to reverse within 180 days. Another view comes that, no, it is deemed paid. Think of this particular scenario where I'm just collecting that money back and then asking for I will get paid for that, and I will give it back in the form of deposit. Is that okay? Deposit is not attracting any GST. To be very honest, to avoid all these confusions, some of our clients, we have advised them, don't take it personally, because this is not an advice I am giving you. What we did is, we drafted the agreement in such a manner that we will pay back that 5% retention money. So we complied with this proviso. We will accept deposit in place of that. So the transaction, it's only money received, full money received, 180 conditions satisfied, and deposit we are receiving. And because 180 days, deposit, there is no GST. In all the ways, it is a prudent decision to restructure your agreement rather than looking for a decision at later point of time, which will come after 15 or 20 years later. At that time, the damage would have already done completely. So when there is an alternative view, take a conservative view or change your agreement accordingly. Now, sometime, not time 40, no? Time 40? Okay. I'll stop it in another 5-10 minutes. When you go back to your office or when you go back to your practice, when you go to office, just do this exercise. Check with your clients or check in your own books how many parties are not paid more than 180 days, and then find out what is the liability which is already accrued, what is the interest liability which is already accrued. When you pay this later point of time, you can avail the credit, but your interest will become a cost. And this is a welcome move from the department or from the lawmakers. They said, if you pay after 180 days, then you can avail this credit. When we did the audit, I came across one more interesting scenario. The bill was due on 1st of January 2018. Okay, 1st of June, due in the sense, it became 181st day was 1st of January. This company has paid on 5th of January. 5th of January they paid it. This will be shown in the January month return. January month return only, the reversal and then payment, everything, both will happen in the same month. Now, my question is, should they pay interest from the date of availment till 5th of, or I would say 1st of January? Both are happened, reversal, payment, both are happened in the same month. What is your opinion? Sorry? Interest has to be paid. Why? Because I paid it in the same month itself. It's only 4 months, 4 days difference.
You enjoy trade process also.
Correct. But it will reflect only in the January month return only, no sir. The reversal, both are in the same. It's a nullified effect, no effect in that. If you're reversing it in the month of January and then paying it in the month of February, then that impact will be reflected in your GST returns. But both are happening in the same month. Nobody will come to know. And second point is, yeah.
On the 181st day, the reversal has to.
Absolutely. Alexander sir is correcting, telling the exact point. As somebody was telling also, that is a correct view, that the 181st day you have to reverse it along with interest. Whether you pay it on 182nd day, not a matter. Not a matter. Okay. So if it is 180, if it is not paid within 180 days, 181st day you have to reverse. Even if it is happening in the same month or same return, that is nowhere it is mentioned. So you have to pay interest for 6 months. So there are other points also, amount. So sometimes what happens is, we will pay it in the form of kind. When you go for mobile, how many of you have bought mobile? Everybody, right? Sometimes we will exchange our mobile also. So when they are pricing it as 1 lakh, see for example 50,000 or something, we will actually pay only 40,000. We will exchange our old phone also. So can this be considered as money not paid for the purpose of 16? You understood my question, right? You went to a mobile shop, you bought the mobile for 50,000, you took the credit also in your books of accounts, but you paid only 40,000 because you had a Samsung old phone, you exchanged it. Can this be considered as not paid? No. Why? It is not paid, no actually. Even if it is in the form of kind, it says consideration. Consideration includes money or kind also. It's not saying money. Okay, so in my view, that can be considered. Depreciation tax component. Don Bosco is looking at me. Shall we continue for 10-15 minutes? Would be better, no? Because there are a lot of good points which I have to cover, which you will definitely come across. Because this is a crisp, let me tell you, this is a crisp which I have made from, not only from the, act, I've included all my, the experience also into it. So it will be like a good capsule to all of you. And I've included all the AR rulings, all case studies, everything, case laws, everything. I'll try to impart as much as possible. Depreciation. Yeah.
In mobile case, we are buying batteries, sir.
Yeah.
There is a condition buyback.
Okay.
Buyback is there, for which we have to that much amount of will be less.
Yeah.
So whether it attracts GST or not.
You mean exchange?
Yeah, exchange only. He's giving.
See, this is a part of value of supply.
Yes.
You can. I don't want to get into it right now. You can ask the respective person, and I'll just give you one simple answer. The value will be taxed on the entire amount, not on the exchange balance amount. If it is for 50 and 40, then tax will be charged on 50,000. When the value topic when it comes, you request that, because I don't want to move from my topic. And depreciation. Depreciation. If the capital goods are purchased and depreciation has been the GST component has been capitalized, can you claim GST?
Yes.
If you capitalize along with your goods and claiming depreciation on that.
If you are not availing the credit, you can.
Yeah, I'm not availing. See, for example, if I capitalize the GST component, can you avail?
No.
Act says depreciation. If you claim the depreciation, what depreciation is that? Company depreciation, company policy depreciation, income tax depreciation. What depreciation is this? Sorry?
IT Act.
Correct. It's IT Act only, because we have different depreciations. We have company depreciation, policy depreciation, right? Company policy will have a depreciation. Companies Act will have a depreciation. And Income Tax Act will have a depreciation. In this itself, we will have WDV, blah, 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 all these things we are having. So I'm just giving you all the examples so that you will not get confused at a later point of time. It says, if you claim income tax depreciation, you are not eligible. That's all. Now let me complicate further. Assume that I capitalized it in the month of July, but later management, the expert, GST expert went and told, why did you capitalize it? You will not get the benefit in the income tax. It's better to, it's better to claim GST, so you will get the full credit. So management capitalized it in the month of July, but later, somewhere in December, they reversed it, and that depreciation, whatever they claimed, they reversed it, and then they claimed GST. Is it possible? Is it allowable as per the law? You understood, right? I capitalized it, so I'm not eligible. But later point of time, based on some advice, the management has reversed that depreciation claimed on income tax, and they again transferred to the GST credit ledger in the books, and then they claimed it in the subsequent month also. Is this okay? You understood, right? You understood, right? They capitalized it, claimed income tax depreciation also, but later they said, no, this is not beneficial, let's move on. Let's take that, surrender that, whatever the income tax depreciation which we claimed, just pay back to the department, and let's claim the GST claim. Is this possible?
Possible, but you have to pay some interest.
No, why should I pay? I'm not claiming, no. I'm just claiming now only. It is not something like I claimed and reversing it. I'm just claiming it later point of time only. Any idea? See, there is a old case law under the service tax regime also, which will prevail to some extent, which says, even if it's a Gujarat High Court case law, which says, even if you are capitalized and later point of time, if you are claiming it, the credit cannot be denied. So you can claim it. This is the case law which is relevant in service tax, which the position will continue in the GST Act also, subject to 16.4. 16.4 was not there in service tax. This is 16.4 of CGST Act, which clearly says that for any invoice, if you want to take the credit, time limit is available. So if you do this exercise after 1 year, you will not be 1 year in the sense after 20th of October. If you do this exercise, you are not eligible to take the credit. Thumb rule: any invoice pertaining to any financial year, you will not be able to take the credit post 20th of October or annual return filed date, whichever is earlier. There are some companies, like in our own office, we have some companies, that company will come and then say they are from Bangalore. We have to sign off the balance sheet on 1st of April. Somehow, because our office is doing some bank audits and all, we usually request and move to 10th or something. Once they file the balance sheet and all, they will say, just finished off all the tax audit also. Because forms were not available, we are not doing it. Now they are requesting us to do GST audit also. Just finished off. We said, hold on. First of all, let's hold on, because now if you have any changes or something to be made, then you can do it only if you don't file the returns, annual return file. If you file on annual return on 10th of April, or the form is not available right now, but if you do it at the earliest, then it will not be recommended right now, because let the law settle down, then we will follow that later point of time. So for the year, it is not recommended to file the annual returns before 20th of October. And it's not an advice, it's just an information. So this is 16.4, which clearly says time limit for claiming ITC. It is 39. What is the due date which is mentioned for the monthly return under section 39, or annual return filed date, whichever is earlier. Can I avail ITC on debit note raised after the time limit for raising debit note? For example, March month, I raised a debit note. In the month of December, can I avail the credit? Can I avail the credit? You understood, right? One debit note has been raised on November or December 2018, which is pertaining to financial year 2017-18. Can I avail the input tax credit? Please answer, please.
But the resident debit note is raised in November.
In December. Pertaining to financial year 17-18. Can I avail the credit?
Yes, we can avail.
No, you cannot, because time limit is over now. First, time limit is over.
The tax summons is taking place during.
First of all, there is a mistake in the question itself. Deliberately, I asked this wrong question. You know why? You cannot raise a debit note pertaining to 17-18 after this time limit. If you go to the invoice, somebody will be handling. At that time, you ask him what is the time limit for raising debit note or credit note. You cannot raise debit note or credit note pertaining to the previous financial year post this particular date. That means due date for filing 39 or annual return file, whichever is earlier. So the question of raising debit note itself is not available. That itself is wrong. Okay. So I just wanted to give you these kind of mistakes so you will understand the correct position of law. Second, can I avail the ITC on other tax paying documents like bill of entry, ISD invoice, etc., etc. after the above time limit? Not available. Don't even ever think of it. Is it recommended to file annual return before October 20th? Recommended, not suggested. I am not suggesting, it is recommended. If your clients are crazy, let them file. First of all, form is not available, let the form come. Goods received in lots, we have already discussed. Exception to section 16.4 is only one. Thumb rule, 180 paid later. Document and condition, we already discussed this. We already discussed this also. The 36.2 we already discussed. And 36.3 says, if you are paying any tax based on any order, demand, fraud, willful, misstatement or suppression of act, then you are not eligible. Based on any order where you did some fraud or something like that, then you will not be able to take the credit. No major differences. So ITC on capital goods and input tax input, there is no major difference. I could find out only 3 differences in the GST law. One is IT depreciation on GST on capital goods shall not be claimed. 2, some capital goods are eligible only with some conditions like vehicle, works contract, immovable properties except plant and machinery, etc. And third difference is reversal of ITC for input and input tax services covered under section Rule 42, whereas for ITC on capital goods reversal covered under Rule 43. These are the only three differences in the GST. This is also nowhere it is mentioned. I just summarized it based on my understanding. If there is any more differences, I am welcome to accept it. Litigation prone areas. I am just continuing. I don't want to break the flow. I am just continuing. No problem, no. So should I break the for the tea?
Yeah, we'll have tea and 5 minutes.
Majority, what do you say? Should we break for tea or should we take another 10-15 minutes?
Break for tea.
We'll break for tea? Yeah, we'll break for tea and then we'll come back. Okay. Sharp 10 minutes. Now I think 11:46. Sharp 11:56 we will be starting. Because we have to, lot of things we have to cover. Place of supply also we have to cover. So please come back at the earliest. So far, see.
Most of them are not followed.
Most of them are not followed. Now I'll tell you my own experience I shared in the last session also. I recently met one director of service tax, that means now GST, investigation. He is the director of investigation actually. So I asked him, sir, GST is implemented, but most of their employees are there in their office. So I said, how is GST going on? He said, fine, absolutely perfect, Rajiv. Then I asked, why are you not going for inspection, or most of your employees are there in the office? Then he clearly told me that, Rajiv, if we go now, we'll get a small mistakes. If we go after 1 year, we'll get big mistake. So they are also waiting for the bigger one. So they will not allow you to have a small poison and then die. They will come to you when you are in ICU. At that time only they will come. Complete damage would have been done. At that time they will come and catch you. I'll just start the presentation. I'll just move on. I will clarify the rest of your doubts post-line. I'll just start with this litigation prone areas. So you may definitely come across in your practice or in your, if you are in the company, or definitely you will come across. Don't get confused, because there are alternative views which are possible. So if you don't get the answer, it's not your mistake. Its alternative views are possible on this particular area. So that is why I said it's a highly litigation prone areas. Normal loss, that is process loss, abnormal loss, diversion of inputs, goods lost, all these things, credits available or not. When there is a manufacturing process, it is normal loss definitely will be there, right? That normal loss, should I reverse the credit? Abnormal loss is there, should I reverse the credit? Goods not used, that means they diverted the inputs. Should I reverse the credit? Or goods lost, should I reverse the credit? Quickly tell me.
It's already consumed.
It is consumed.
Loss or something is
Okay.
already put to use.
Okay.
So, and you have taken the benefit and you are claiming it.
Yeah.
Once it is put to use,
Yeah.
it is the finished product or
Yeah.
elsewhere,
Yeah.
it is used by you.
Correct. So generally there are two views. One is goods lost and loss of goods. These two are different words. 17.5 clearly says goods lost, not goods loss of goods. Process loss, then abnormal loss, normal loss, all are loss of goods, not goods lost. Please understand, there is a difference between these two. We are very good in playing with the words, no? So we are also smart. So we say goods lost is different from loss of goods. This manufacturing, this process loss, abnormal loss, diversion of not input is not there, but first two are loss of goods in the process of manufacturing. That is nothing but manufacturing is also business, so you can claim it. That is my view. This can be disputed. Alternative views can be emerged. I already disclaimed this. But definitely we can contend in the court. We can definitely win it, because there is a strong argument, strong way of interpretation to it. Diversion of input, not possible. You are using that input for gifting or free samples and all, not possible, not available. Goods lost, that is clearly given in the 17.5. H, where they said, no, you are not eligible to take the credit. Then you have, for example, people will be, some of the companies will be having admin offices. There they will be having AC, stationaries and all. Will you be able to take the credit? Admin office. There is no supply of service. There is no supply of goods. It's only admin office. There are two views possible. One is, it is for your own use. Another alternative view is, it is used for the purpose of business. There should not be having a nexus of output supply of goods or services. I second the second view. So stationaries, AC, whatever you purchase, you can take the credit. But department can take a view. I said show in the first picture, no, they can take a different view. Be ready for that. But there is a point in your argument, so you can definitely win it in the court of law. Definitely in the sense, most probably. When I consult the advocates and all, first they will say, most probably we can win it. One time, I asked after 2 or 3 hearings, then I asked, I said, what is this most probably, will we win it or not? No, most probably we will win, Raj. Then I understood what is this most probably. AMC contracts. I will redefine this word itself. I don't want AMC in my office. What is AMC? Annual maintenance contract. There are a lot of issues in this. One is AMC, when is the service received? On the date of sign off or on the date of completion of the AMC contract. So 16 says you can avail this credit only after receiving the service. So when did you receive the service? One school of thought says at the time of sign off, you avail the, I agreed to provide service. So that would be the date on which I can take the credit. Another school of thought says, no, it should be taken on a proportionate basis, on a monthly basis you should take. There is another third school of thought. They are saying, no, this invoice is received, but the service is completed on the last day of the AMC contract. This school of thoughts I refer to experts, okay, but I don't mention the experts because nobody is an expert in this area. But this is my own different view of thought process which I put it into word. One is you can take on the date of sign off. Second, monthly basis, on a pro rata basis. On the third one is you can take it at the last day. What is your opinion? AMC contract. Huh? On the date of sign off, I'll say that service has not been received. No, service has not been received. Service is received only on the last day. Whatever you say, I will disagree. Not deemed received. Services. See, for example, after 1 year, if something goes wrong, they are providing the service to me. No offense to you. If you had you said the other option, I would have argued the other way. I am looking from the department perspective. So if you take on the first day, I will take the last day. If you take the last day, I will take the first day. Proportionate also I will say. Service is completed only on the last day. How can you take it on the proportionate basis?
It's just like this lots.
No, it's not like that. Now you argue the other way, I will argue the other way. So this argument will continue. Your point is also valid, but there are alternative views which can be emerged. But just look at one more aspect. Now if you ask me personally, which one will you take? Don't quote me anywhere. I will say on the date of sign off I will avail it. You know why? It's not based on the other aspects. Assume that AMC invoice is issued on 31st of March. Okay. If you take on a proportionate basis, you will be eligible to take only for 6 months up to September. 6 months credit lost because 16.4 prescribes time limit for taking credit on an invoice. So second option, not possible. You will not get complete credit. Third option is you can take it on the last day. If you take it on the last day, again time limit under 16.4 is prohibiting me to take the credit after 1 year. So that is not the intention of the law. Had it been prohibited, they should have brought it under 17.5. So the intention of the law is not to prohibit AMC contract or insurance contract and all. So, and it is not practically not possible to take the credit in this particular scenarios. So I will go with the first one. Don't go with that one without, don't quote me for that. You follow whatever, I give you 3 options, no? You follow whatever you feel the correct one. And what I would say is, rather than going with this disputable argument, change your AMC to, I put new words to it. I put new words, I did not see this. HMC, half yearly maintenance contract, or QMC, quarterly maintenance contract, MMC, monthly maintenance contract. So what happens? If you do it on quarterly maintenance contract, at least that will fall into that financial year. The March month invoice will come in March, April, May, June, with before filing the annual returns or the due date. So you ask the AMC contractor to give MMC or QMC, not AMC. Tell them that AMC I don't want. AMC is disputable. Better to have MMC or QMC or HMC. Okay. And insurance contract, I have the same point. At least AMC we can ask the guy to split it and give it to you. How do we split the insurance contract? They will not give you MMC or HMC or AMC, right? They will give you only annually, they will not give you monthly. This is highly disputable. Again I am telling you, the same scenarios will continue here. You can opt for the first one, but highly disputable. If the department can come and disallow that particular point, I will not be surprised. Because insurance policy coverage starts from one date to another date. So would be difficult. And one of the point which some of the companies are doing is, they are ensuring that their insurance coverage is starting from 1st April, ending with 31st of March. That option you can think of it. That is the only practical solution available in insurance contract.
As long as there is no refund provision, you cannot get back. Even you paid the insurance.
Yeah.
Yesterday, even you did not ask for refund.
Yeah, correct.
Even may happen even the very next
Correct,
day.
correct.
You are right. You can rightly claim on the first day. Data.
Correct. No, sir, I do agree with your point. At the same time, I do disagree with your point.
There is no logic for disagreeing.
No, actually, another view is, the insurance companies are liable to provide you the service till the last day of coverage. From the first day onwards. So, you are also right. This view is also right. Everything is right. Now, what is right will be decided by the Supreme Court at later point of time. Till that, we will wait. Because I am not a lawmaker, I am not a judge. So, let the my intention here is to share all the possibilities, so that tomorrow if you take a call, you know that this guy has told me that these 3 options are available, and it is at our option to take this particular decision. Now I will tell, yeah.
Sir, will it not be covered under continuous contract?
Again, continuous contract, we can argue in that manner also. But still, continuous contract, how do we take the credit again? On a proportionate basis?
You go by the main event, the date of payment or the date of contract.
I don't, his point is very logically correct. That means he's saying that if you take the insurance, if something happens, right, that is what you're saying.
Yeah, no.
It's the event.
Continuous contract, the liability arises on the date of payment or
Yeah.
payment. So going by that, I am eligible to take credit on that.
I don't want to dispute on that. You are also right. See, any view on insurance contract, I accept it. It's a knowledge to me also, because Alexander sir is coming up with another altogether different option. I accept that also, because I said no, it is a disputable one. I would like to accept your point. Now I am getting new options. I am very happy that. Reversal of credit. That means very simple manner. If I said you, if it is used for the purpose of business, then only you are eligible. There are a couple of instances where you have to reverse your credit. One is, this is something with respect to 180 days, which we have already covered. 17.1, 2 and all talking about the reversal. If you use it for other than business, used for exempted supply. You understand? Assuming that you are using for personal, not personal, other than business, because they are using the word any business. So you cannot say personal, other than business. If you are using it, then you are not eligible to take the credit. Whatever credit ITC attributable to that particular non-business purpose has to be reversed. Same way, if it is partly used for exempted, partly used for taxable, you have to reverse to the extent of exempted. Excluding zero rated. Zero rated is not an exempted one under section 16 of GST Act, clearly defined. So, excluding zero rated. Zero rated is not an exempted one. That has to be reversed. How to reverse and all, it is already defined, clearly given. The formulas have already been given in the rules. So I'm just rushing because pause of time. I thought of taking you through the workings, but you can go through rules and you can easily identify that. Blocked credits, very very important. I have multiple arguments in this, and I hope you will also have multiple arguments. You see, chartered accountants' brains, I don't know how they are thinking from this much of variety of alternatives. Once the law says something, we are always there to interpret, and that interpretation will have no end. See, in respect of 17.5, it says motor vehicle and other conveyances are not eligible to take credit. You are not eligible to take credit unless it is used for further supply of such vehicle, that means sale of that vehicle. I'm not supposed to use the word sale, but I can use it because supply includes sales. Supply is a bigger definition, sale is a smaller definition. Supply includes sales, so further supply of such vehicle, you can take the credit. And transportation of passenger, if you are using that vehicle for transportation of passengers, you can take credit. And imparting training, that driving schools and all, if they are buying the vehicles, then you can take the credit. And transportation of goods, if it is used for transportation of goods, that motor vehicle can be used. Now, one of my friend came and told me, Rajiv, I have an private vehicle and I am transporting goods. Genuinely he is transporting goods. He is a small vendor actually, he is not a small guy. So he is transporting goods. So he asked me, can I take the credit? I said, is your vehicle intended for the purpose of transportation? No, it's a private registration. Intended means what? White board. See, you have these kind of boards, right? White board, yellow board, black board. These are all my own interpretation. Over it is mentioned that this is the way it has to be interpreted. This is, I am disclaiming first of all. Nowhere it is mentioned, but my interpretation is, if it is a white board, it is a private vehicle intended for our own personal purpose, not intended for transportation of goods. Second is yellow number plate, commercial vehicles. Third is black number plate, which is commercial vehicle or rent for self-drive. You know that Zoom car and all, from Bangalore, they give you this car. So in my view, yellow and black can be taken, and white you cannot take credit. And don't quote me anywhere because this is nowhere mentioned. This is my own interpretation I came across. Because if you take a view, if my friend told me what is the problem, the law clearly says transportation of goods. I said then all the motor vehicles are eligible. He asked me why. I said, do you have God's photo in your car? He said yes. Do you have some papers in your vehicle? Yes. Do you have a leather seat cover in your vehicle? Yes. All these are goods. As per the GST definition, any movable property is a goods. Even I am carrying my pen. I came in my car only. I am carrying the pen. I am carrying the coat. I am carrying this. These are all goods. So I said, I am also eligible then. I am also eligible. No, I have a pen. I have a coat. I have carried. I have backpack, laptop. Then everybody will be eligible. None of the car can move without having any goods in that. That is not the transportation. So my view is the transportation you should look at from the intention of the vehicle. So you are eligible in this. In the white one, don't take credit. If you take credit, litigation prone area, no problem, we will come for your rescue. One of the chartered accountants known in my circle has taken the credit. When I asked him, he said, I have taken knowingly, I would like to fight it out. I said, fine, very good, because he's knowingly taking that decision. So motor vehicles, if it is used for personal purpose and all, not eligible, but motor vehicle generally, whether it is for business purpose also, it is not eligible. Block the credit, but only few examples are given. Transportation of passengers means what? All our cab drivers and all those people are eligible. Further supply of vehicle means, Kivraj Motors and all, they are into supply of vehicles. And imparting training means Maruti driving, schools and all, they are eligible. Transportation of goods, no way disputable. Yeah, I'm coming. Whatever your queries, I just compiled everything and then made it. Vehicle maintenance, vehicle insurance, eligible for ITC? Vehicle is not eligible, but I have vehicle maintenance, insurance. Am I eligible for this? You are eligible. Reason being, this is my interpretation. There are alternative views also possible. The law used the word in respect of respect of, see, look at that. You can see, shall not be available in respect of the following. Oxford Dictionary has defined the word in respect of. I am quoting Oxford Dictionary. That dictionary says in respect of means as regards with regard to. That means only with respect to that. Only that. So the disallowance is eligible only with respect to this. Okay. Had they used the word in relation, then in relation to vehicles would have been disallowed. That means your maintenance, insurance, anything with relation to vehicle would have been disallowed. In relation also has been defined in Oxford Dictionary, which says in the context of or in connection with. So everything will fall into it. When I take the place of supply, I will tell you, there they are using the word directly in relation to. Directly in relation to means only if it is directly in relation. What is indirectly in relation? I am a chartered accountant representing my client for an capital gain case where the subject matter is a immovable property. Then Act says location of that property, immovable property will be the place of supply. But fortunately the section says directly in relation. So whatever the directly in relation only will come, not indirectly in relation. See, in respect of, in relation, directly in relation, indirectly in relation, there are a lot of legal terms. Okay, so I hope you would have understood this. Now, so clear, sir? Excuse me, clear? Yeah. So next one is motor vehicle shall have the same meaning as Motor Vehicles Act. Other conveyances like, you can consider vessel, etc., etc. And because I have again taken the dictionary meaning from Oxford Dictionary for vehicle. Vehicle is not defined in the GST Act, so I just I went to Oxford Dictionary and found. So lorry and cart, everything is applicable. That has some implication because of pause of time. I'm just moving. Motor vehicle should be used exactly for taxable, for used for site visit and all, not eligible. Means like if you should use it for taxable supply. See, some vehicles like drilling machines and all, drilling machine, excavation, this JCBs and all you have seen moving on the road. Are we eligible to take the credit? That is not transporting any goods. That itself is a machine. JCB, then earth moving machines and all, no? It is, in my view, you are not eligible to take the credit. Reason being, that machines and all falling under the definition of motor vehicle as per the Motor Vehicles Act. And it is not transporting goods, it is not transporting passenger. Very unfortunately, that will be blocked credit. But you can still fight it out because it is actually used for the purpose of business. But in my view, it is very difficult to substantiate. Next is, I told you this authority of advance ruling. What is the problem with this company? The main problem was this CMS Limited, they are carrying the cash. Cash is not a goods. I said transportation of goods only eligible. As per the goods definition, money is an excluded one. Money securities are excluded. They are carrying the goods. Are they carrying goods? That is a subject matter. No. They were carrying only money, not goods. Goods exclude money. So, but I don't know what is the alternative view which the advance ruling authorities are having. Anyway, it is subject matter of appellate authority. Let me see, probably in the next session, probably that ruling will come and then I will be able to share that. Now, look at this. Other blocked credits. Never ever allowed categories: membership of a club, membership of a health fitness center, travel benefits to employees. That means this many of the software companies, they are having the membership with many of the health and fitness centers and all. So that is not eligible at all, whatever it may be the condition. Second is rent-a-cap, life insurance, health insurance. Only this is eligible only if it is notified as obligatory or used for tax towards making taxable outward supply, or they are in the business of that. Third one is food and beverages. That food and beverages, outdoor catering, beauty treatment, health service, cosmetic and plastic, all these are eligible only when it is used for the purpose of providing output tax, outward tax. Now let me tell you one thing. See, rent-a-cap, because I have to give you an example, otherwise it's a waste of, just I can mention rent-a-cap. What is rent-a-cap? First point, rent-a-cap has not been defined. First point. Neither in GST Act nor in IGST Act, for that matter, it is not defined in UT GST Act. Second point, rent-a-cab is not defined in Motor Vehicles Act also. Rent-a-cab is defined in Finance Act 1994, but that is repealed. Problem comes. My viewers, take the definition from Motor Vehicles Act, but that defines only motor cab, not motor vehicle. Rent-a-cab. It's defined only motor cab, but that says only up to 6 passengers without driver. Okay, this is one point with respect to rent-a-cab. Second point, it is saying obligatory on the part of the employer. What is this obligatory? Is any obligatory obligation is there on the part of the employer? Yes, as per section 66 of the Factories Act, it says if the women employees are leaving the office post 7 o'clock till as per the Factories Act, ladies, a woman employee should not work post 7 o'clock before 5 a.m. in the morning. So, but that act itself is giving power to all the states to increase the 7 to 10 subject to some conditions, industries and all, the states can decide. Very unfortunately, Tamil Nadu government has extended to some industries, but there is no condition like transportation. But Bangalore, that means Karnataka Shop and Establishment Act says, if the women employees are leaving post 7 o'clock, but before 10 o'clock, post 10 o'clock they are not supposed to leave, as per the Factories Act itself has given a restriction. If they are leaving post 7 o'clock but before 10 o'clock, then the employer has to mandatorily arrange a transportation. By doing that, if they are arranging the rent-a-cab, then they are eligible for credit. So rent-a-cab means up to 6 passengers excluding drivers, sedan cars, etc., etc. If it is more than 6 passengers, then it will not be rent-a-cab. In my view, it's not, I'm just disclaiming, in my view, it's not rent-a-cab. So if it is a bus which they are arranging, you can very well take the credit. I have another AR ruling, but just moving. And this I already explained, rent-a-cab. I have a beautiful case study. This case study says, Infosyn Limited. I already disclaimed, this word has nothing to do with any of the software companies. This is not similar to any of the software companies' names in the industry. Top 5 software companies are not there in that Infosyn Limited. You cannot make out anything, right? Yeah, Infosyn Limited, a software company registered in Bangalore, is arranging a cab. So the time limit in between, they are arranging 5 a.m. to 7 p.m., 7 p.m. to 10 p.m., 10 p.m. to 5 a.m. Can Infosyn claim ITC on GST charged by the cab vendors on the above 3 time zone? Please tell me quickly. 5 a.m. to 7 p.m. not eligible to claim. 7 p.m. to 10 p.m. Yes, because it is a Bangalore shop and establishment, Karnataka shop and establishment is prescribing, so they can avail. And 10 p.m. to 5 a.m. No, because it is not obligatory, so you cannot claim. It is, first of all, it's a violation actually. So second is, rent-a-cab is taxable. Can Infosyn claim ITC? Assume that rent-a-cab is, they taxed it. Assuming that they are collecting the fees from the employees, for the recovering the money. Can they avail the credit? I told you at the beginning, right? It can be considered as business. It can be considered as a business, and then if they are into taxable supply of rent-a-cab, then they can claim the credit. Because here you see, if a rent-a-cab, if they are used towards making taxable outward supply, you are eligible to take the credit. That is my view. Again, don't quote me. Will your answer be different if the vehicle is arranged as a bus instead of sedan car? Because that is not rent-a-cab at all, you can claim. And will your answer be different if the Infosyn Limited is registered in TN? Out of this Infosyn, one Zent is from Tamil Nadu, which is registered in Tamil Nadu. That name is mixture of 2 software companies. I did not say that. You said something? Okay. So, out of that, one company is registered in Chennai. So that company will not be able to take the credit for the Tamil Nadu, because it's registered in Tamil Nadu, because Tamil Nadu shop and establishment is not mandating that. Works contract, only if you are doing works contracts business, then only you will be able to. And immovable property for your own use, you will not be able to take the credit. And And composition levy, you will not be able to take credit. First of all, it is not charged as he rightly mentioned. Non-taxable person, they will not be able to take the credit. Personal consumption, not able to take the credit. Goods lost, I already disclaimed this. Goods lost is different from loss of goods. Stolen, destroyed. I have more examples which I would like to give you in stolen and all, but I don't have a pause of time. I'll just quickly tell me, we have a company which they are manufacturing shoes. Okay, what happens is, you know how the theft will happen in this particular industry. The employees will take a couple of shoes, will throw over the walls. When they go out, the security will check, and but nothing will be there. Because when they go out and then out of the, they would have already thrown this shoes over the wall, and then they will go and then pick it up and then will go. These are all kind of stealing which will happen. So in these cases, if it is goods are stolen, then you are not eligible to take the credit. Gift of free samples. Okay, gift of free samples, highly disputable, because first dispute is if the free sample is a supply or not. First of all, there itself is a problem, because if there is a consideration, then free samples can be considered as a supply. When somebody is taking supply, you ask them, they will explain this. Because if there is no consideration, then consideration in the sense what? Need not be directly in relation. There could be indirect consideration also which can come. So if it is not supply, then ITC is blocked. Okay, free samples which you give, then it will be blocked. And availing ITC in special circumstances, that means if you are registered, and then when you are doing compulsory registration, voluntary registration, composition levy become normal levy, and then exempted supply become taxable supply. Section 18 says that how to do the avail the credit, ITC credit. I am not dealing right now with this because I have to take the place of supply also now. No ITC after 1 year. Please ensure that ITC will not be eligible after 1 year for these items.
For RCM, that is reversing for 180 days.
Yeah.
And later on payment basis 30 years.
Yeah.
If it extends beyond 1 year.
Yeah. I told you, 16.4 has only and only one exemption. That exemption is 180 days. After that they are paying, but though invoices date is before that, that will be eligible. Yeah. Change in constitution, because if there is any merger or something, I wanted to tell you one lively example, but I'll just move in. Job work, what happens is in job work, the input should be returned to the principal within 1 year, and capital goods means 3 years. These are all not applicable to molds and jigs, dies, jigs, fixtures and tools. Okay. Please note, GST ITC 4 has to be filed by the supplier, the principal supplier within 25th of the following end of the quarter. Some of the companies are not filing. Big companies also I know they forget to file this form when they are sending the goods to job work. And ISD, I'm just skipping it, and financial bank and financial institutions, I'm just skipping it. With that, ITC session is over because next I have to come, start with place of supply. Any doubts in this? I'll give you 2 minutes. Any doubts in input tax credit? Have you understood or you got confused? Most of them are smiling. I can see a lot of smiles on the audience. I don't know what is the meaning of the smile. You understood or you got confused after my session, or you got a lot of perspectives. Some I would not have even answered because even I don't have the answer, because litigation prone areas I cannot give an opinion over the in this kind of sessions. So some, we are also disputing, we are also taking the conservative view, as I said, changing the agreements, not going in the, I don't want to fight with the department. Something like this, the first picture I said, I don't want to do this with the department at any point of time. If there is any dispute between me and department, I will take a conservative view. I'll just move away from that. Like the way I did for AMC contracts, change it, and the way we did it for retention money, change the agreement and then get the money and then it is paid. This condition is also satisfied. Deposit, that is not. So these are all the solutions which are available, and there are a lot of complexities involved in it. Anyway, if you have any doubts, we'll meet in the post lunch also. I can clarify. Let me move on to place of supply. timing, madam. Yep. I'm not overloading you with more information, right? When they asked me to take the session, they clearly told me that this is a basic session on GST. But the only thing is, I don't consider anything as basic. Now, basic and all gone. So these are all, I had a lot of case studies also, because they requested, I just removed it and a couple of things, and then, but I cannot remove all these kinds of complicated matters, without which if I take the ITC, it's useless. I can just tell the provisions and then go. Then if you go back, you will face all these points, and then that you will say that that fellow took something and I understood nothing. It was a waste of time sitting there and all. So that is why I am covering, irrespective of, there is no request from the organizers. I thought they told me that educate you, but the word which used was a little confusing for me. It's basic. I make it in such a manner that the next level is I have material for the next advanced course also. That means case studies and other things. But since this is not the right forum, probably I will present it in the right forum. Okay. And I'm happy that to the God and then the institute for giving this opportunity first of all, and then God for giving a lot of practical exposure at this particular age, because many people will not rely on the on people. So fortunate that by God's grace companies are relying, and then big corporates are trusting us, and then giving more exposure. See, it's not about the professional fees, that is secondary for me, at least for me. The kind of exposure which they are giving us is tremendous. The kind of, I'm going to share one of the experience. I'm very excited to share the experience rather than the provisions. So you will come to know that these provisions are applicable to you also, and then you will also face these kind of problems. So in the place of supply, reason for determining nature of supply. See, I'll just simplify all these provisions. I have the same thing, example, case studies, etc., etc. And first we have to understand what is the need. Why do we understand the nature of supply? See, place of supply is actually originating from nature of supply. Nature of supply has two limbs. One is location of the supplier, two, place of supply. If these two limbs are in the same state, then it will be called as intrastate supply. If these two limbs are in different states or union territories, it will be called as interstate supply. Or if one limb in one state, one limb in another state or a union territory, then it will be called as interstate supply. Even within the state also, if one limb is in the normal area and another limb is in there in the SCC, then this will be called as an interstate supply. You understood? Intrastate means location of the supplier and place of supply are in the same state, it will be intrastate. Subject to SCC supply, subject to import, subject to sale of goods to foreign nationals. They are eligible for refund under section 15 of the IGST Act. Only exception for intrastate supply will be considered as interstate supply. Even both are in the same state, are one, import of supply, import of goods. Second, sorry, SCC sale. Third is supply to foreign nationals who are eligible for refund under subject to conditions mentioned under section 15 of the IGST Act. So you understood nature of supply, right? Intrastate and interstate. So I said two limbs. One limb is place of supply, another is location of the supplier. The location of the supplier. So if you don't know these two terms, you will not be able to determine what is the nature of supply. Correct? And please understand, place of supply has been defined, and this is a legal term, not a common language. It is a legal term. So place of supply means place is supply. No, it's a legal term which is clearly defined. Okay. Now location of the supplier, first we have to define. I said it in my last training session also. Location of the supplier of goods not defined in the GST Act. Location of supplier of service defined in the GST Act. So if it is not defined, litigation prone area. If it is defined, no problem. Still disputable only, but still to some extent at least something they said, so we can follow that. The location of supplier of services, how to determine? So, supply made from, see, I'll just, without looking into it, I'll just tell you from a practical, you have any book or something? You have any book or something? So you have a registration certificate, right? You have a registration certificate. If you are supplying the service from the registration certificate, in the registration certificate you have two components. One is principal place of business and additional place of business. If you are providing service from any of this place, that will be the location of supply. Clear? If you are registered and if you are supplying from registered place, that will be the location of supplier. Assume that in the registration certificate you have Coimbatore, Chennai and all, and in the registration certificate address is also mentioned you are providing from Coimbatore. Coimbatore is nothing but with the same registration number, that will be the location of supplier. Second scenario is you are supplying from a fixed establishment. That means that is not registered, but it is there as an office, some marketing people are sitting there, and then that kind of fixed establishment which is not registered. Then if you are providing service from that, then that will be the location of supplier. Okay, and if there are more than one establishment, then you have to see that location of the establishment most directly concerned with the provision of supply. And in the absence of the first all this, you have to consider the usual place of residence. Now already I confused you in ITC. Let me just take confusing this also. I clearly explained all this. See, there are a lot of interpretational issues in this particular slide also. It says fixed establishment, right? More than one establishment. What is establishment and fixed establishment? Both are different, right? Nowhere in GST Act they have defined the word establishment. They have defined only fixed establishment. So, but in my view, you can interpret establishment as fixed establishment, take the same view. Okay, but still it can be questioned tomorrow. Establishment is different, fixed establishment different. Don't ask me what is establishment, it is not defined. So you clear? Location of supplier of service is clear. If it is from registered place, that would be the place. And if it is from fixed establishment, that would be the place. If it is more than one physical establishment, you will see most directly concerned with, and otherwise usual place of business. And location of supplier of goods. I have my own interpretation to it, which we are using to our clients, which I am using to our clients, but don't quote me anywhere, because I am also not a lawmaker. As I said in the last training session, I am not a lawmaker. I cannot define what I wanted to define. I don't know what is this is the intention of the law, so I don't know anything. So I just defined it, interpreted as physical point where the goods are situated under the control of the person, and where the incorporated or registered and ready to be supplied. So these are just a couple of definitions which we are using for our clients, and when we share the presentation you can take it. So the next thing would be supply in territorial. So intrastate and intrastate I already defined. I already defined the location of supplier of service. Location of supplier of goods is not defined. So just use whatever comfortable definition or whatever logic which come to you, you define that. And supplier in territorial waters. If it is in the state, we can understand. If it is in the water, how do we find out? See, if it is in the water, that water baseline where it is most associated, most nearer to what that particular state, that will have the jurisdiction. Now, that is determined based on one particular concept called baseline. That baseline also, when I read, I just wanted to understand rather than telling the baseline and all. Baseline, nobody understands. How do you know? How many of you know baseline here? Baseline. I'm not surprised because even I didn't know what is baseline. In the entire GST Act, only one place this word is defined, because I just put a control F and then searched whether it is defined somewhere else. It is not there. Baseline means, so you can see a picture there, right? The last corner is the baseline. That means if that particular lower watermark is there, no? That lower watermark, that is the baseline. From there only they will count 200 nautical miles, 12 nautical miles, whatever it may be. It is theoretically easy to understand. Now I understood the concept. Now I don't know how to do this. If you go to Marina Beach, will you be able to identify this? What is the lower watermark? If tsunami comes, lower water will be there in Lungambakkam also. So it depends, we are not experts to decide that. That will be decided by the customs authorities and other expert in that particular area, but please understand this is the baseline. Supplies in territorial waters, their respective states will have the authority. Now, place of supply of goods. You need presentation or we will discuss? Discuss? Okay, very good. Place of so first we already discussed that there are two limbs to determine a nature of transaction. One is location of supplier of service or goods, which we already defined. Goods not defined, it is not available. Now we have to define place of supply. If you don't know these two concepts, you will not be able to determine nature of supply. So the second limb, it is defined in section 10, 11, 12, 13 of IGST Act. 10 talks about goods with domestic transaction. The words which I am using is common language, don't take it as it is. Domestic transactions. 11 is goods only, but with import or export. 12, services with the domestic transactions, with the parties who are there in the domestic. 13 talks about services with some foreign parties. 10, 11, 12, 13. That is what we are going to discuss. Discuss. There are 5 transactions. I will give you some thumb rules also, because ultimately when you go out, you will not be able to recollect whatever I said, but at least the thumb rules you should recollect. I will tell you after the 5 points which I have to discuss. In the goods, 10.1a says if there is a movement of goods, the goods finally getting delivered to the recipient, the goods are finally getting delivered to the recipient shall be the location of, no, that is a place of supply. I will also confuse you when I speak. So that is not the place, the location of supplier, this is place of supply. For if there is a movement of goods, you have to see where the goods are finally getting delivered. Now, second is if there is a movement of goods but there is no third party instruction. Okay. Second is 10.1b says if there is a third party instruction. That is nothing but in business language it says 10.1a is bill to transaction. 10.1b says bill to ship to transaction. So in an invoice you can see bill to, that means supplier name will be there, bill to ABC Limited. Now in the second scenario which I said, you will have supplier name, bill to ship to. So bill to XYZ, the ship to ABC Limited. So the first one transaction I said finally getting delivered, right? In the second scenario, bill to ship to transaction, whoever has given the instruction, his principal place of business shall be the place of supply. Understood? Understood? So I'll give you thumb rule also, just hold on. Third one is there is no movement of goods. Assume that I have a DG set in Tidal Park. I am sitting in Chennai. I am selling into a party in Bangalore. DG set is movable, goods only, everything is pakka, everything is satisfying. He is sitting in Bangalore, so I have to raise an IGST, right? If there is no movement of goods, then the location of that particular goods shall be the place of supply. Clear? So where the goods is located? It is located in tidal park. Okay. So if it is located in tidal park, that will be the place of supply. That is coming in Chennai. I mean in Tamil Nadu. So fourth one is goods assembled or installed. 10(1)D says. So sometime what happens, assuming that we have assume that we are opening a new branch in Bangalore, and then we need to install all the workstations. So we are engaging some people from Tamil Nadu to install that. Then the place of supply shall be the installation. That will be Bangalore. Though supplier and recipient are located in Tamil Nadu, they have to charge IGST only. Supplier located in Tamil Nadu, and then the place of supply is Bangalore, so IGST has to be charged. Last one is goods taken on board or conveyance. Train. Assuming that train, you all travelled in train, right? Train, especially in Shatabdi, I always quote Shatabdi because that's a beautiful example. Shatabdi, if you get in, they will give you food, right? Because why I am taking Shatabdi is, there is a beauty in that particular example, because it is starting from Tamil Nadu, crossing Andhra Pradesh and reaching Karnataka. 3 states. I don't know whether it is crossing Telangana. No, it's Andhra. Okay, 3 states. So when they are supplying food to the passengers, when they are supplying the foods to the passengers, if it is supplied in Tamil Nadu state, Tamil Nadu will say, boss, it's supplied in Tamil Nadu, you give me my tax. If it is supplied when the train is moving through Andhra, Andhra will say, boss, supply happened in Andhra Pradesh only, not in Tamil Nadu. Assuming that finally it is reaching in Karnataka, Karnataka will say, boss, if you are reaching my territory, and finally goods which is there in the stomach is reached in Karnataka. Correct? You can take this view also. So there are different interpretations which are possible. So GST Act has clearly defined, saying that if it is a goods where you have taken the goods on board, assuming that you have taken those supply of food, whatever you have supplied to passengers, which you have taken it in Tamil Nadu, the central railway station, then that will be the place of supply. So you have to charge? No. That is why I am always asking this question. That is only the place of supply. Assuming that the supply is made by a Karnataka party, who is located in Karnataka, then it will be IGST transaction. So, what is place of supply? Because it's such a common error everywhere that the moment I say place of supply in Tamil Nadu, immediately people will conclude it's a CGST, SGST or IGST, whatever it may be. Never ever do this. Don't do 2 things. 1, place of supply has nothing to do with the registration. 2, place of supply has something to do with nature of transaction, but not completely. Unless otherwise that it's such a marriage, husband and wife. Without that, it will not stand. Because supplier, location of supplier is also important, the other one is also important. Without that, nature of supply cannot be determined. You understood? So, place of supply will be the goods taken on board. Clear? I have a couple of examples. Now, bill to ship to, I already told for the ITC purpose, I said good bill to ship to transaction, you will not be able to take you will not be receiving the goods, but still you can take the credit. Now, let me give you thumb rule. You are raising the invoice, right? When you are raising the invoice, you have something called supplier details, you have something called recipient details, that means bill to party. If the bill to party address is there, that will be the place of supply. That will be the place of supply. So, assuming that my supplier is located in Tamil Nadu, bill to Delhi, it will be IGST. If it is Tamil Nadu, then it will become CGST, SGST, subject to, if it is applied to SCC and all, subject to those 3 points. So you should always keep it in mind. The thumb rule is always subject to conditions. So supplier, recipient. If the recipient is located in the same state, subject to those three conditions, it will be SGST, CGST only, because supplier is also located, place of supply is also in Tamil Nadu. Okay, supplier here in the left box, in the right box you have recipient, that is bill to party. Now you take bill to ship to party. Bill to ship to, you will have one invoice, there are two limbs to it. One is supplier, recipient and delivering to, that is ship to, bill to ship to. You look at only the bill to party. Don't ever never ignore that ship to party. So your invoice, standard thumb rule is supplier, recipient. Look at the recipient and charge. Clear? Goods where you are delivering, don't mind. Why is, in ship to transaction, bill to ship to transaction, it is deemed received by the party. Okay, that is why we are looking at the bill to party. Now what happens is there is one more transaction to it, because A say sold to B, B sold to C. Based on B's instruction only, A sent to C. Now B has to raise an invoice on C, right? At that time again it will be bill to transaction. Again that B will come to the supplier, because I have to raise an invoice, no? B will come to the supplier, C will come to the recipient, I mean the bill to party. So you look at that. Thumb rule is clear. This is subject to three conditions. One, in case of no movement of goods, this thumb rule will not work. If there is no movement of goods, you have to look at the goods, where it is located. Two, if the goods are assembled or installed, this thumb rule will not work. Three, if the goods are taken on board, this thumb rule will not work. So majority of the transactions will fall into this. So I said thumb rule subject to those three conditions like SEZ, import, supply made to foreign nationals, that one. Then look at there is a movement of goods or not. Two, installed or assembled, anything is like that. Third, goods taken on board. Now, okay, now I'll confuse you with one practical example which we come across. One company which is located in Sriperumbudur, they are into manufacturing of ACs, fridge, then mobiles, etc., etc. Don't want to quote the name of the company. They are our clients. They are, when I met them 2 weeks back, they gave me an example. They gave me what they did. One party from Delhi, they instructed this company. This company is a manufacturing company. They are manufacturing and then moving all the goods to their warehouse, which is located next to building only. I mean, it's all within the same compound, but it's a manufacturing one place. If you see manufacturing companies, you know that, there are a lot of restriction because there are a lot of patent, know-how, everything will be there. So that is a restricted place. From there, after the manufacturing, it will be moved to the warehouse. This Delhi company instructed their dealer. They told that you supply the goods, but you keep it in your warehouse. I'll make the payment, everything will be over. Because the season is going to come and then the price will go up. So I just wanted to close this deal. So they closed the deal, goods also supplied, kept it in the warehouse. They are paying the warehouse rental charges also because supply is made. Now the question is, what is the place of supply? What is the place of supply? That is the crux. Tell me now, where is the location of supplier? We'll answer together. What is the location of supplier? Ayyo, post lunch session aagaville. I think we are going to have lunch. Don't worry. Be energetic at least for 15-20 minutes. Yeah. What is the location of supplier? Sriperumbudur, Chennai. No doubt about it, right? What is the location of supply? What is the place of supply? How do you say Chennai? No movement of goods. Delhi, somebody said. I really appreciate. I want these kind of different answers. Both are right. Both are right. What is your answer, sir? Your good name, sir? Sorry? Oh, okay. Sita. So I thought, gentleman behind you answered it. Okay, Sitapati, sir. Yeah. Oh, okay. Thank you. No problem. So we have majority of people, they are saying Delhi. Some people are saying Chennai. Somebody said Chennai, right? Why said Chennai? Yeah. Absolutely correct. Why did you say Delhi, sir? Good dress. absolutely correct. Both are right. Both are right. How can two right answers be there for one single transaction? This was the question. Both are right. One gentleman, what's your good name? Kumar. So he was saying that there is no movement of goods. So you only said that thumb rule is subject to third limb, that is 10(1)(c). As per that, he is saying that he is also right. There is no movement of goods. Chennai. You said there is a movement of goods. So Delhi. Both are right. But the subject matter of this question is there any movement of goods or not? Nothing else. Nothing else, right? It's not about the question of law. It's a question of facts. Whether there is a movement of goods or not. I'm sure today or tomorrow you will definitely come across this particular transaction. It's just a business transaction. If it happens to them, it will happen. They asked me what is the solution. I also got confused what to say. If it is something with respect to the law, I can interpret and tell. If it is something related to the facts, I need the pakka facts in hands. So what to say on this particular transaction? You help me out. I have to advise this particular client. Now you help me out how to solve this problem. Please give me your views, different views. Don't give me the same views. Now I'll give you twist to this question. They have not paid the warehouse rental charges. Will your answer be different? They have not paid the warehouse. This is one of the case study which I brought it in my presentation. Because when the client discusses something, immediately I put it as a case study. Because when I get confused, everybody can get confused, right? So the moment I get something, I just put it as a litigation prone case study. There are normal case studies. I have something called litigation. This is a litigation prone case study. Now tell me, will your answer be different if the rental charges, warehousing rental charges has not been charged? Will your answer be different? I'll confuse it to the extent possible. Yes.
So if they pay the rental charges,
Yeah.
it will be treated as deemed to be delivered and it will be IGST will be charged.
Okay.
If they don't pay the rental charges, then CGST, SGST as a movement of goods is not there and what is it?
I'll just put it the other way. I think that would be more clear. That means if the rental charges has been paid, then transfer of all the risk and rewards, everything has been done, and then the supply is over, then that will be considered as there is no movement because the goods are there itself. Don't worry, you will get confused. Everybody will get confused. Any other views, sir? I leave it to you. We found some solution, but I don't know to what extent that can be, communicated in an open forum. The question is whether there is a movement of goods or not. So here we said there is no movement of goods in this particular scenario because they were paying the warehouse rental charges. They said, there is no movement. Goods are already been sold. Supply has been made. They are taking the delivery after 2 or 3 months later. So there is a supply, there is no movement of goods. They already charged IGST. We said reverse it. Reverse it, pay CGST, SGST. This is the conclusion. But
right on the ownership has been transferred to the
yeah.
recipient.
Yeah. Madam, first let me quote one thing. When we define law, we have to go strictly by the word which is used. Here the subject matter is only movement, not about ownership. So, but ownership is important when it is coming as a second limb. Movement means what? Whether the sale has happened or not. In that point, your point is valid. You are saying that all risk and rewards have been transferred. So, that is correct. So, this is a view which we have taken, but it can be, litigated later point of time. Now, in place of supply, if you wrongly determine nature of supply, for example, like this, because we are all common people, right? We are all not that too experts in GST. We are all normal people having some small knowledge in GST. So we make mistakes, or sometimes we come to know the mistake after a little while later, because people who are sitting and raising invoice, they may not be knowing what is place of supply. He will be raising GST invoices, right? If you make a mistake, there are 2 sections. I'm very happy that lawmakers have understood this issue and then addressed it by way of section 77 of CGST Act and section 19 of IGST Act, where they clearly said if you wrongly determine the nature of supply, and paid the tax to the department, then you can claim whatever you paid as refund under section 54, and you need not pay, and then you discharge your liability accordingly, and then you need not pay interest on this particular transaction as per 77(2) subsection 2 and 19 subsection 2. Please make a note of these two sections, because if at all you make a mistake, these two sections will come for your rescue. Please make a note of it, because after the session I don't know whether you will be able to remember all these sections or not, but at least 77 of CGST Act and 19 of the IGST Act must be given utmost priority, because we tend to make mistake. If at all you make mistake, these two sections will come for your rescue. Should I take you through the case studies or? Sorry? Yeah, please.
Suppose I am importing a good from foreign country.
1 minute, sir. Next is import export. Because this is only with respect to domestic transactions. Yeah. So you want me to take you through the case studies, because I have a pause of time. Had the institute given me more time, I would have been very happy to take you through all the case studies. These are all something which generally these case studies will be discussed in the advanced course actually. But I want you to educate more based on these case studies. These case studies are all made based on my own experience. It's not something which is available in any books or something like that. So I just, you can see that, supplier, bill to, ship to, all these things. I told it's very difficult to find out these names actually. Craig Limited, Samsung Limited, Suryan Limited and all. So that I prepared it, but very unfortunately I'm not able to share my views. Even if I share, you may not be able to get the answers, because generally I don't write answers in that case studies. I'll just mention only the case, and then I'll just mention the answer key. That's all. Like institute exam, they will give you an answer key for valuation. I don't know how many of you have been part of exam valuation and all. So they used to give an exam key. So I'll just move on. Next one is import or export. Import or export, very simple manner they defined. They said, if you are taking the goods out of India, from a place of India, it is an export. If you are bringing the goods into India from a place outside India, it is import. Very, very thumb rule. I'll just tell you, assume that this is the custom frontiers as defined in the GST Act. I mean, the India which is defined in GST Act. If the goods are moving from India, assume that this is India and this is other than India, other than, it's crossing the custom frontiers. If the goods are moving from India and crossing the custom frontiers, it will become an export. Same way, if the goods are coming from outside India to India, this will be import. Don't ever, never look at what is the place of supply, where is the location of supplier, where is the parties located, and all, etc., etc. Don't ever, never look at it. I'll give you one example. I'm exporting goods from here to Japan. Goods have crossed custom frontiers. Is it an export? Yeah.
Yes.
Please answer. Yes, no? I'm importing goods from Japan, crossed custom frontiers. Is it an import?
Yes.
Okay, very good, excellent. I am in Chennai. I'm requesting, I'm Chennai, I have a lot of holding companies, subsidiary companies and all. I requested my subsidiary company in Sri Lanka to send the goods to US. They did that. I got the realization of money also. Is it an export or not?
Yes.
Some says yes, I'm happy. Yes, no. How many of you say yes? Yes. How many of you say no? Don't think that I'm raising both hands. Some people are not even raising the hands. Okay. I told you the thumb rule, right? Has the goods crossed the custom frontiers? Then it is not an export. It is not an export. Then the last session, one participant asked me, "Sir, you said it is not an export. How will you account it? It is a transaction. I made a profit. How do I account it?" I said, "You have to definitely account it. I'm saying that this is not, GST is not taxable. GST is not applicable because not in the taxable territory. But income tax will come behind you. You have to definitely recognize it in the books of accounts and then pay tax accordingly. And let me tell you one more thing. I imported the goods from Japan. It did not, this is called high sea sales. It did not cross the custom frontier. Before reaching the custom frontier, I requested my party to send the goods to Sri Lanka. Is it an import? No? Absolutely correct. It is not crossed custom frontiers. Now I'll make it further complicated. Goods are sent from Japan, crossed the custom frontiers, but did not reach the custom port. After that, they made the sale. Very interesting, no? Send the goods from Japan, cross the custom frontiers, not reach the custom port, and they made the sale to third parties. Say for example, ABC imported. In the water, they made the sale. In the territorial water, they made the sale. They sent it across. They said, PQR Limited will take the delivery. I gave you the first example. That means before reaching, that person need not take the delivery. It can be given. This is called high sea sale. This is not a hypothetical example. Please understand, this is not a hypothetical example at all. You may be thinking, how can the high sea sales can happen? What is this fellow is talking about? How can the sale will happen in the water? It is happening. It is happening. These are all practical examples which I am giving you. This will happen before reaching the custom station itself. Sale will happen. So here, the question is, initially we had a lot of confusion. Import is one taxable event. Second taxable event, how much tax I have to pay? Finally, GST department has clarified. Only one person has to pay tax. That is, when you import it, you pay tax, and the other one, no problem. When you release it, that will be considered as a second limb of transaction. But e-way bill also, there is some clarification. You ask the faculty when he comes, what would be the impact in e-way bill. So I have some pause of time, so I am just moving in. So you understood, right? One is transaction happened abroad, one is came to India, then another is exported from India, then one is came to imported, but before reaching custom frontiers, not imported I cannot say, but imported, they tried to import, and before reaching custom frontier they sent it to some other country, crossed the custom frontiers but sent it to some other party. So all these situations can happen. Now here you have to understand one thumb rule, that for the purpose of import of goods, I said only and only one condition: taking goods outside India or bringing into India. Did I say you that, because these are the confusions, did I say you that you have to realize the money in foreign currency? Not required. These conditions are all applicable only for service. So goods not required. So foreign currency payment obligation not there, and high sea sale, re-import, all those things. Re-import also, goods will also be liable to GST. See, they are importing and re-exporting, liable for GST. And place of supply of service. The goods is over. Goods is over. I think all of you are clear about goods, place of supply of goods. Clear?
Yes.
Clear? Hoppa. I'm just getting some strong responses now. I'm happy. See, the one of the most important thing in my philosophy is always smile. Wherever I go, even if the client is scolding me, I'll just smile at him. You know what is the problem? Not in smiling. See, some clients will have a lot of pressure. They are not scolding you actually. But after some time, because of the smile, they will call you back. I'll just keep calm.
But if you smile in front of the tax authorities, keep smiling, smiling, smiling.
I will put it the other way, sir. I was successful doing this exercise, and because of that I made good rapport with the department also. So now I am successful in taking the things into my client's favor. See, smile, if you argue with anyone, argument wins the situation but loses the person. But if you smile, you wins the entire crowd. So better you smile. So I'm happy that this time when the crowd all are smiling, I'm just happy, I'm also getting a lot of satisfaction. I don't know the meaning of that smile, but still. Place of, you asked me something, yeah.
Yes, in the case of goods, when the goods reaches, say for example, I am in Chennai, I imported the goods into in Bombay, and I found a customer in Bombay. So what would be the case?
That will be IGST transaction only. Import is always IGST transaction. Bill of entry when you file, you have to pay IGST only.
So I have to pay GST, then again I have to charge.
No, whoever is releasing the goods, whoever is the importer has to make the IGST payment and release it. So next is place of supply of services. Place of supply of services where the location of supplier of recipient, I already explained this, where location of supplier, so 12 says location of supplier of service. I will take 20 more minutes. I think it's 1:13, right? What, madam? When I said I will take 10 more minutes, no, some lot of expressions are coming actually. No problem, no. No problem. Happy? Okay. Good. So, 12.2 says place of supply of service. Now, goods we have defined in all the manner. Still, I'm not saying that there will not be any confusion at all. You will get confusions. If it is a new examples, new scenarios and all, I'm also happy to deal with it. Because whenever I get new thing, when I incorporate into my presentation and sharing with my audience. So, place of supply of service. I'm going to give you a thumb rule. If you're transacting with a registered person, then that registered person's address will be the location of the place of supply. Just testing whether you are all sleeping or at least listening. So, this is place of supply. If I am the registered person, we discussed about the location of supplier. Now we are putting ourselves into the shoes of the recipient and seeing what is the place of supply. So if I am transacting with a registered person, that registered person's address, that will be the place of supply. Assume that you are transacting with an unregistered party, the address available on the record shall be the place of supply. Third is, if both are not available, then location of the supplier of service. Can there be a situation like that? Registered party, I know. I am transacting with ABC, he has a GST registration number. I am transacting with an unregistered party, he is giving registration number, address. So no problem. Will there be a situation like address enakku theriyama? Will there be a transaction? Online transaction. How many of you have taken, I'll pause of time. How many of you have taken DD? DD, demand draft. Everybody. Have you given your address to them? Generally banks will be very strict about KYC. But DD, if you they will give it to you over the counter.
No, application.
No, I think DD can be taken by third party, right? If somebody can help me on this, because I have taken DD from Federal Bank, I don't have an account with them. DD can be taken, sir, across the counter. If you give the form has to be filled up, but that is not the address on their record. That is only form which you are filling up for the DD. But DD, you need not be a customer, you can take the DD. Correct me if I am wrong, because banking regulation, I don't know. Up to 49,000. One good friend of mine is helping me on this particular thing. But you can take DD, sir, across counter, where you will not be giving your address. So that will be the place of supply. Place of supply means place of supplier of service shall be the place of supply.
Buying train tickets. Will that be an example?
Buying train tickets, sir, we have a separate provision. Yeah, sir, this thumb rule is subject to some restrictions.
No, without address. Address on record.
No, train, that is what I am saying you. Train, for all the conveyance if you board, for that embarking for the journey, that will be the place of supply. So for train, if you are taking the ticket, though you are not giving the address.
That is right. I'm just saying. Service provider
Yeah, correct. So sir's point, Alexander's point is, he's saying that when you take the ticket across the counter, you will not be able to take, you will not be giving the address. But I have a, that is a good example. But let me just clarify you one more point. For embarking for the journey, there is a separate provision. This thumb rule is subject to this, but that's a good example. But this kind of, when you go for a movie ticket, what would be the place of supply? For that also, you will not be giving address. But for that also, there is a separate provision. That is why I did not take that example. Okay. Now, immovable property. Place of supply shall be the place at which the immovable property is located. Okay. And see, look at this point, I told you, right? Directly in relation to. Directly in relation to. It's not in relation to. If it is in relation to, all chartered accountants will have difficulty. You know why? Assuming that, as I said in the few minutes back, if I am dealing with a client who is having an immobile property, long-term capital gain issue has come, I am representing the client. So what will happen? If the immobile property is located in Delhi, then I have to charge IGST, because location of supply a chartered accountant in Chennai and place of supply immobile property is Delhi. But this is not in relation. This is not directly in relation. This is only in relation. But here the word used is directly in relation. How complicated, no? So, because it is using the word directly in relation, only these services like architects, interior decorators, surveyors, engineers, all these experts will fall into it. And they are also saying lodging and accommodation, hotel inn and all these things will be the place where it is located. Accommodation in immobile property, organizing marriage or reception matter or matters related there to officials. So a lot of things which are related to immobile property. Now, restaurant and catering services. See, the thumb rule is subject to 12.3 from onwards. 12.4 says restaurant and catering services, which says place of supply shall be the place, location where the services are actually rendered, performed. If you go to hotels and all, they will give you CGST, SGST, right? They will give you CGST, SGST because supply is made there and then and there. That is why they are charging CGST, SGST. Training and performance appraisal. Little tricky this one. If you are assuming that I am a HR professional, I say, why do we take HR professional our own? Assume that I am doing some corporate training for GST, on GST for a company which is located in Bangalore. Okay, so I will go to Bangalore, I will go to an hotel and then they will arrange everything and then I will charge. What should I charge? What is the place of supply? In case of training, if you are transacting with registered party, that location of such registered party shall be the location, place of supply. So I have to charge IGST only. Now the same scenario, assuming that I am personally in my personal capacity, I am going to Bangalore and I myself conducted training on GST in Bangalore. So there are more participants registered and now what I have to charge? I have to charge because there is no registered party. Now what I have to charge? IGST, SGST, what? It says if you are transacting with unregistered party, location where the services are actually performed, that will be the place of supply. So Bangalore will be the place of supply. So I have to charge the Karnataka, SGST and CGST, right? Correct. So place of supply is wanted to know whether somebody is also saying along with me the wrong answers. I am happy that everybody is disagreeing with me on this. Actually you have to charge IGST because location of the supplier is Chennai and then the place of supply is Bangalore. Excellent. I am finding some results now. So admission to cultural events. Cultural events like any cultural events, if you are getting admission, if you go to music academy and all, you will get admission for cultural events. So place of supply shall be where the event is actually held, where the park is located, that amusement park and all, that place where it is actually performed. And organizing an event. Organizing an event. See, I have an example. See, for example, there are a lot of TVs, they are arranging Filmfare Awards, etc., etc. So, one TV channel will ask one particular company to take care of the entire events. IPL event itself. One of my friends' brother is doing the IPL events across India. So he is arranging all these kinds of banners, advertisement, everything. So what happens is, or if you organize an event, the place of supply, if you are providing to a registered person, then that location of that registered person, whatever the registered is, that will be the location, place of supply. And other than registered person means, if the event is held in India, place where the event is actually held. So for example, if the IPL match is held in India, in Chennai, Chepauk Stadium, then that will be the place of supply. If you are transacting with an unregistered party. Then you have to charge.
No, unregistered person, RCM.
No, this is a recipient is unregistered. Now you have to see what is the location of supplier. Place of supply is Chennai. We are discussing only about place of supply, place of supply, place of supply, not about nature of transaction. To determine nature of transaction, there is one more. Wife has to come. Only here husband. No offense to ladies. Here it's only husband. When both of them come together, then only we can determine the nature of transaction. What kind of transaction it would be. So, if it is other than registered person, event held outside in the location of the recipient. Now, transportation of goods. Looks simple but very complicated. GTA. Transportation of goods. I got at least after GST implementation, I would have got more than 100 calls on this GTA issue. I don't know what is the main issue in this. I said only thumb rules. Follow this, determine. That's all. If transportation of goods include by mail or courier, including mail or courier, if you are providing to a registered party, that location of the registered party. If you are providing to a location to unregistered party, location at which such goods are handed over for delivery. Okay, handed over for delivery. If you are transacting with a registered party, location of such supplier or the location of the registered party. Otherwise, if you are transacting with unregistered party, then where your goods are handed over for delivery, that will be the place of supply. Transportation of passengers. If you are transporting, if there is a transportation of passengers, then if it is to registered party, the location of registered party. If it is to unregistered party, the passenger where they embarks on the conveyance for the continuous journey. Alexander sir, you asked me for this, right? You said train tickets.
Using that as an example.
Yeah, correct. No, generally, if you are taking a flight or train or whatever it may be, place of supply shall be the place where the passenger embarks into the conveyance, to vessel or to train or to... Sorry? Very boats. Somebody said, Sitaram sir. Sitapati sir, okay. So, where he embarked for the conveyance.
Like that food boarded in train, where it comes in like...
Food is different. Taken on board. That is a goods. This we are talking about service.
Likewise, where is getting more...
You can apply the same logic, but don't quote me. Because that is a goods, separate provision, 10.1e. This is different, where it clearly 10.9. And 12.10 says service on board a conveyance. 10.1d, E, which says goods taken on board. Now service taken on board. Word used is service on board because service cannot be taken on board. Correct? Service you can provide. If you are taking service on board, that means service on board, then location of the first departure. See, for example, if some services are being provided in the aircraft, okay, some services are being provided in the aircraft or in the vessel for that matter, where the vessel is starting or where the aircraft is starting for the continuous journey, the starting point will be the place of supply. If it is a goods, it will be the goods taken on board. I'll give you a typical example. One flight coming from Delhi to Chennai, and from Chennai it is going to Bangalore. I'll tell you two scenarios. One is sunglass sale in the aircraft. Common. Sunglass, purse, everything, the aircraft will come with a beautiful smile. So everybody will be tempted to buy sunglasses. So when they tempted to buy sunglasses, the question comes, what is the place of supply? Place of supply shall be where the sunglasses. Assume that the flight has come from Delhi to Chennai. From Chennai it is going to Bangalore. The sale is happened to the passenger from, the goods are taken on board from Chennai, okay, and then the sunglasses are taken on board in Chennai, and then the sale has been made. Now the place of supply shall be, the goods are taken in Chennai, so Chennai will be the place of supply. If it is a service being provided, it will be Delhi, because the flight started from Delhi only. Correct? You understood the difference, right? Now, in the sunglasses, there are two limbs actually. One is the aircraft which is buying the sunglasses, and aircraft will sell the sunglasses. Now, I am talking about the aircraft which is selling the sunglasses to the passengers. You understood the difference, right? If the sunglasses are purchased from Delhi and it is reached into Tamil Nadu, then bill to transaction only. Okay. Now, the sunglasses bought by, say, airline, which they are selling into the passengers, then the place of supply shall be the sunglasses which is taken on board. There are two limbs to it. Because last session, one participant from the aviation industry, he asked me this question. So I just clarified that there are two limbs to it. Okay. Now, telecom communication. Look at your telephone bill, you will understand. I'll just share the presentation. I think some of your stomach started burning and I can see the fire in it. So I don't know whether it is for learning or for eating. That we will see. Give me 5-10 minutes, I'll just finish it off. Banking and financial industries, advertisement. I'm just skipping those two. And export of service and import of service. So I just finished 12, that is domestic transaction. I'm going to the last topic of the day, that is export or import of service. Export of service, there are 5 conditions to be satisfied. Goods, very very simple definition. Export of service and import of service, you have to satisfy a couple of criteria. Export of service, they are saying that supplier of service is located in India, supplier is located in India, recipient of service is located outside India, place of supply is outside India, and convertible, you have to receive the consideration, the payment should be received in foreign convertible foreign exchange, and exchange of supplier of recipient of services are not merely establishment of distinct person. That means it should not be your own branch. That's all. Okay. So first 4 conditions are supplier located in India, recipient located outside India, and place of supply is also outside India, and the amount payment is received in foreign convertible currency. You can decide everything subject to place of supply. That is why we are going to the place of supply again if there is a foreign party. Now I understood, you understood why we are going to determine the place of supply. So far we have determined place of supply only for the domestic transaction. Now we are going to determine the place of supply for the foreign transactions when there is a foreign party involved. Import of service, government said, I need only foreign currency. You need not pay it in foreign currency, you pay it in INR, no problem. They said import of service, the supplier of service is located outside India and recipient is located in India and place of supply of services India. But there is no condition like no distinct person, no, that means you have to pay tax. If you receive any, see, look at the beauty. If you receive service from your foreign branch, you have to pay tax under reverse, import of tax, import. And if you are supplying service to them, that is not an export. Beauty, no? What is export means? You will get the eligibility. You coming with a note? You're coming with a secret note? Okay. No, generally, after some time they will come with a secret note. That is why. So, look at the beauty. If this will be considered as an export transaction with a distinct person, but not as not as an export, but as an import. So, import means you have to pay. Export means you would have got some benefits that is not available. Very unfortunate, but that is the position as on date.
You have to tax in that case also.
Export of service? No, that will not qualify as an export service.
So which means you have to charge the
Yeah,
GST.
correct. Because only if it is qualifying as export, then only it will come under 16 of IGST Act, then only it will be considered zero rated, then only you will be eligible for LUT, and then only you will be eligible for exporting of service without payment of taxes. So many links. So the first itself, we failed. So no LUT, nothing will work on this. Place of supply of service. On this particular, the standard rule is, place of supply of service, general rule is location of the recipient of service, or because you cannot expect foreign parties to get it registered. So that first limb in the first 12th rule, that 12, section 12, that standard point is not here. And location of the supplier of service. I mean, location of the recipient of service, if place of supply of service, where the location of recipient of service is not available, you have to take the location of supplier of service. Now, goods required to be made, see here also there are a couple of sub limbs actually. One is if the goods are remotely, physically it should be available, but they will do it remote repairs. See, for example, I imported a machine from Germany. It's got it repaired. None of the Indian people may not be able to do it because there is a technical know-how. So they will ask Germany people to either to come down or they will say you do it remotely. So if they are doing remotely, but still the location of the, place of supply shall be the location of where the service is actually rendered. So that means where the goods are physically made available. So immovable property, again the same scenario continues here, where the immovable property is located or intended to be located, and admission to cultural events and all, see the difference between the previous one and this slide is, though you can see the same beauties who are dancing in the picture, but the difference is only this is where the non-foreign party is involved, the other one foreign party is not involved. Place where the event is actually held. See, for example, there are a lot of actors association and all, they are going abroad, and then some famous musicians, they are going abroad and doing some events and all. The place of supply shall be determined based on this. And supply of service at more than one location that most attributable to, specifically attributable. Specified services like banking and all. Transportation of goods excluding mail or courier if there is a foreign party, place of destination of such goods. And the transportation of passengers, place where the passengers embarks on the journey for conveyance for a continuous journey. And online information data base and access retrieval service. 2 days back, I got it. One of my client got notice. Not 2 days exactly. I just sent the LOE, letter of engagement, yesterday only. I would like to share a couple of other examples also, but this I will explain. This company is into providing service for the online database and information OIDAR companies like LinkedIn. What is this online information and database access or retrieval? So to read that itself, I am always looking into the system. See, OIDAR. See, for example, you go to LinkedIn, because when we had a discussion, finance team was not able to give a solution to it, because the question of fact is whether the company is an OIDR or not. So I got a good opportunity to talk to the technical people, the technical head of the head of operations. So he beautifully explained to me. They were doing the backup data process for LinkedIn. So he had some sort of access and all. He showed me everything. What happens is, if you ask some conditions, that means chartered accountants practicing in GST in Chennai, if you give these 5 conditions and retrieve the data, you will get some search options, right? You will get some, say, 20 results. This is called data retrieval system. So LinkedIn will be doing it, maybe Facebook may be doing it, I don't know, whoever is doing it, whoever is doing this exercise will be falling into this category. Now my client, what he is doing is, he is not doing this particular exercise, he is helping LinkedIn to create this database. Like Google. Google is also having the same. Google is having this database thing. But my client is not doing this data retrieval system. My client is helping them to prepare the database. So we have taken a stand. I think the hearing is tomorrow. Wednesday tomorrow, no? Tomorrow at 4 o'clock only the hearing. So we prepared all the things. We come to this conclusion. But I don't know to what extent this will help. Now what happens is, if we don't win this, it's already in the appeal. If we don't win this, what will happen? Company has to close. There is no other way. So these are all the implications. Obviously we will fight it out. And I'll give you one more example. I just missed one point. This is the last point. Anyway, my presentation is over. That is why I'm taking some time. Not overloading, no? Not overloading, right?
To an end now.
Yeah, fine. Because I don't know what he really meant. But still, when see, the ultimate thing is, when I make some presentation, my ultimate aim is to convey the knowledge, whatever little I have, to all the audience. I have no other intention, or I have, somebody asked me, can you share the presentation? Why not? It's a shared knowledge, you take it, no problem. Even if I spend hell lot of time on this for presentation preparation, I said, it doesn't matter. I request all the time, to SASs to share the presentations and all. Nothing high funda in it. What is there in it? I'm just putting some extra effort to prepare this. It's a knowledge sharing, and then ICA is one of the ICA's motto is also to share knowledge, and we are also part of. We are all, we are getting a lot of recognition in the industry, or recognition in the society because of the Institute of Chartered Accountants of India, only because of the institute reputation, institute recognizing we as the chartered accountants, we are getting a lot of reputation. So we have to do something. We have to give it back to the institute in some or the other way. So if somebody is getting benefited out of it, I'm happy to share this information. So any questions? I don't want to confuse you with more examples. One of the insurance industries, one client is one client from insurance industries are from the insurance industry. They are into sub-brokers. What happens is the sub-brokers, they are having a problem because of this section. Because in case of subsidiary, I'm not able to find the PPT. In case of intermediary, here. In case of an intermediary, the place of supply shall be the place of location of supplier. My company is an insurance broker. My client, they are providing reinsurance business to a foreign party. So foreign party is involved. So section 13 is applicable. Now the problem is, for intermediary, even if you are providing service to a foreign party, this will not be considered as an export of service, because intermediary cases, the place of supply shall be place of the supplier. That is in India. So it is not outside India. What happens is now, this company is paying out of their pocket 18%. Foreign party is not able to, they will not pay that. Now they are paying out of it. Now we made a representation to the Indian Bank Brokers Association, IBA, and through this company, and requested them to represent to the ministry. Otherwise the company has to close down. What they will do, 18%, the foreign company will not pay. They will ask, why should I pay your taxes? First concept is export, tax cannot be exported. So in this case, company made the representation to IBA. I hope the IBA will take it to the ministry and then give a solution to all the brokers. Indian Brokers Association will do the needful accordingly. Any doubts? I'm just winding up my presentation. Thank you so much for your cooperation, and any doubts? Happy to clarify. I'll take 2 minutes. Yeah. Any doubts?
So Rajiv,
Don't ask me what is the menu for the lunch today. Yeah.
Rajiv, can you explain
Yeah.
report of service?
Yeah.
Can you go back to your
Yeah. Can you precisely ask me what is the requirement? What is the doubt?
I'm combining two, that online data access with import of service. See, for example, I'm using some software license.
Yeah.
The supplier is outside.
Software license is always a disputable one in the old regime. Yeah.
So I'm accessing this data. Okay. So for example, I am just.
No, there is a difference, madam. Just because of pause of time only, I'll clarify. If it is getting clarified, it's fine. Otherwise, we will, because already they are looking at me. First is, license is different. Database retrieval, I don't have any ownership, anything. I'm just, you would have seen, no, Excel is also a database. You have a database. If you search Chennai alone, that will show only Chennai. That is a database retrieval system. So further doubts if you have, we will clarify. Because this requires some sort of analysis, what kind of license, everything. Any other doubts? If you don't have any doubt, I can interpret two things. One, you understood everything. Two, you understood nothing. Which one I should take it?
Media is also there.
No, this is a typical chartered accountant's answers. When I advise some clients also, one client mailed me 2 weeks back and said, can I destroy the books? 8 years are over. I sent an email. You can destroy the email subject to transactions or something going on, you should not. Now I met the client also. Client asked me, "You're a typical chartered accountant." I said, "Well, I asked you a straightforward question. You know whether there is a litigation or not. You know in and out of this company, but you are still disclaiming and sending an answer to me." I said, "If at all there is any tomorrow, if at all it is missed my eyes, I should not give a wrong answer." So I said, we always disclaim. Any other doubts? So thank you so much for your cooperation. So we started at 10 o'clock and then we finished at 1:45. Thank you so much for your cooperation. I hope all the best for it.
It was a nice, interesting session. Knowledge sharing with a smile. That's what it deserves a special mention. Thank you very much, sir.
Let's close. Yeah, thank you, sure. Yeah, thank you so much.
We can break for lunch now. We reassemble by 2:15 for post-lunch session.
Good afternoon, friends. It's audible. Hello. Good afternoon, friends. I am Doriraj, Chartered Accountant in Practice. It's my pleasure on behalf of SARC, it's my pleasure to introduce the speaker of this technical session on GST, CA V. Shankaranarayanan. Shankaranarayanan is a Chartered Accountant and Cost and Management Accountant with more than a decade experience in financial and taxation compliance spanning across diverse sectors including banks and companies like Ramco, TVS Group, Barclays Bank, Standard Chartered Bank. He is a master trainer of GST affiliated by Institute of Chartered Accountants of India, trained more than 500 chartered accountants across India in GST law and practice, trained 2000 plus finance and accounts professionals across India on indirect taxation and GST, member of GST study group of ICAI, member of Governing Council and Treasurer of Indian Chamber of Indirect Tax Professionals, co-author of the book Gain Smartly Through Senvat Credit Rules 2004, regular speaker on taxation at the Institute of Chartered Accountants of India and the Institute of Cost and Works Accounts of India, a regular speaker across various professional and industries forums, a partner at Sharaf and Chandra Chartered Accountants, Chennai, heading Indirect Taxation on Compliance and Litigation Division. Let us welcome the guest speaker, Shankaranarayanan.
Thank you, sir, for the introduction. So I think this is the second day of your 3-day program, and post-lunch sessions are always those challenging sessions. The challenge is the fight between the food and the food which is in the stomach and the food for thought. So you have to somehow manage to get over that. The suggestion or the simple clue that I can give is interaction. So I will not be telling you that we will take questions at the end of the session. Let's take it then and there, so that the doubt also gets clarified. At the same time, there will be a harmony of interest. You asking a question will wake up the person sitting next to you. So that will end up being beneficial for everyone. So the key topic on GST, for that matter on any taxation in India, has been the question of valuation. And we had this valuation specifically questioned in the erstwhile excise and service tax, where we had to know whether this is includable, this is not includable, what will form part, what will not form part, and when I am not supposed to take the transaction value, I should go for something else for finding out my valuation. All these questions are answered in just one section, which is section 15. So whatever was addressed in excise elaborately were
are all cramped into one section, and that is followed by a list of rules which deals with different scenarios under which the valuation will have to be done. Plus, it also accommodates certain type of businesses where how we have to do the valuation. The example being Forex. A Forex dealer is your client. That Forex dealer, how is he going to charge GST on his selling price? Because he might buy dollar at 64 from you. That 64 rupees per dollar that he gives, is it the full consideration on which he is liable to pay GST? Now that is the sort of question which is answered in specific in the rules only for certain type of industries. The few other industries being, one is this Forex, the other one being the air travel agents, and we have 2 or 3 classifications like that. And added to that, in GST we have a new kind of people emerging, that is second-hand goods dealers. When you buy and sell second-hand goods, what is going to be the taxability, how the valuation is going to be done. Now the second-hand goods explanation extends even to a finance company which is repossessing the vehicles or repossessing the assets based upon which the hire purchase loan was given. What is the price to be considered as the purchase value? So that can be considered when you are subsequently selling it to another person. All these are specific scenarios addressed in valuation, the part of rules which deals with valuation. So one section and about 7 or 8 rules covers the whole of valuation. With that in perspective, let's move into the questions per se that we might have. What are the provisions that we are going to discuss? As I said, section 15, which is going to be split into 2 major categories. One, when I can take transaction value as taxable value. That means somebody raises an invoice on someone else. Can I say that invoice value is the taxable value? The answer to the question lies in section 15 subsection 1. It says 2 conditions must be satisfied. The 2 conditions are satisfied, then the department does not have a right to question the correctness of the valuation. The 2 conditions being, the supplier and the recipient should not be related. And the second condition is, price must be the sole consideration, only consideration in the transaction. There should not be any other consideration. The first condition of the supplier and the recipient not being related negates all possibilities of stock transfers being taken by the department at the price at which you did. Because both of you are related, you are part of the same entity. So we cannot take the price at which we did the stock transfer. Earlier we were never paying sales tax on stock transfer. Let's take an example of an FMCG distributor. He is sitting in Chennai, he is sending goods to every state in South India. We used to get Form F, stock transfer, end of chapter, no need to worry about tax. Now come GST, section 22 says, read with section 24, if you are registered in every state separately, you are considered to be a distinct person. And read with schedule 1, which says, any transaction between related party, where there is no consideration is involved, is deemed to be a supply, section 7.1. So what happens is, if I do a stock transfer to my own entity in the other state, that stock transfer is 1, taxable, second, the value is questionable. What is the value that I need to take? Not the value which you have put in the invoice. You will have to prove to the department at a later point of time. It complies with the valuation rules. So the 2 conditions which arises from the first point is, the supplier and the recipient should not be related. The second one is, price must be the only consideration for the transaction. How do we prove that price must be the only consideration of the transaction? Now that is a major hurdle in case of services. In case of goods, at least there could be transactions which is demonstrable in terms of the valuation. Let me give a common example where this is going to be a huge issue, is rental. I take a commercial complex, let's take Rosie Towers. I go and pick a 2000 square feet office. What they are saying is, sir, you pay 1 crore advance, monthly rental is 2 lakhs. I am saying I cannot mobilize 1 crore at all. Then they say, do one thing, sir, pay 10 lakhs advance, monthly rental is 8 lakhs. Now the advance that I pay changes my taxable value. If I had paid 1 1 crore, we would have entered into an agreement saying that 1 crore is a refundable deposit. When you say it is a refundable deposit, it is not taxable under GST. Deposit per se is not taxable. The reason being, not interest is exempt. The reason being, it is not a supply. There is no supply. I am just giving you an advance, I am going to take it back. But if I give 1 crore, you will give the same space in rental to me at 2 lakhs. If I give you 10 lakhs, you will charge me 8 lakhs. Now, department has every right in the future to say your deposit has influenced the transaction value and add notional interest. Pay GST on that also. That is how wide this valuation is. Which is why I said the first part is easy. Because who is related? Section 15 has an explanation attached to it towards the end after subsection 4. That the explanation lists out 8 different scenarios which we will run through. In these scenarios only people are considered to be related. Fine, that is done. But apart from relationship, the second condition which they have levied is the price must be the only consideration. If that is broken, every transaction can be dissected. So department has every right to say, I will not agree to your transaction value because I don't say you are related, but the price is not the sole consideration. So this is where we have to be careful when we are doing any transactions audit or related party audits. You have to be clear in telling them, no, GST calls for a different method of valuation. You cannot be doing it at the price. For example, a manufacturing company. 1 unit in Chennai, 1 unit in Bangalore, 1 unit in Gujarat. They might even transfer semi-finished products from here to there. So that one line of product will get finished only from Gujarat and will get sold. One line of product will get finished from Bangalore only will get sold. One line of product manufactured in Chennai, manufactured and sold from Chennai. In this case, the semi-finished stock transfer, how am I going to do evaluation? Those are the areas where we have to be careful because the question can come just because of these two conditions under section 15 subsection 1. So what is the answer? If yes, I am not compliant with any one of this condition, then what should I do? Go to rule. Starting with rule 27, we have up to rule 35 dealing with valuation. You will have to go through 27, 28, 29, 30, 31 and 32 in that order to find out how to value your transaction. Now this is where it throws open the window for the department to question us from any different angle. But if we have evidences, if we have provable facts, it is possible. Like for example, in excise, the same window was provided, but we used to go by cost accounting standard number 4, which used to define how to calculate cost of production. So according to that, if cost of production is calculated, I will add 10% to that and say this is my assessable value. They cannot question the veracity of my transaction. I would have done it at a different price, but I am still ready to pay GST on the 110% of cost of production as certified by a cost accountant, as in the cost accounting standard number 4. They cannot lay hands on my calculation. Maybe that is a sort of safeguard that we may have to give to the clients. So moving further, who are the persons? Like I told you, 2 conditions. First condition is demonstrable relationship. Persons are considered to be related. What is the related party definition? It is given here. Persons are deemed to be related persons if such persons are officers or directors of one another's business. Same person heading both the places or same person having a control over both the places. Such persons are legally recognized partners in a business. So legally recognized partners. Why this word legally recognized partners is to be stressed is, I might be part of an AOP, association of persons. It could even be my flat association. And I am also part of another association. I cannot be called as a partner in both the places. It so happens that I am a member of this association, member of that association. But there is a view from the department saying, you are the member, you are the beneficiary, and in both the cases you are the beneficiary. But they cannot call that as a relationship because the word here is, you must be a legally recognized partner. Association of persons member is not considered to be a partner. That is why this word requires an understanding of why they are stressing on legally recognized partners. And such persons are employer and employee, straight away, clean bold. Any transaction between employer and employee, in schedule 1 you might have already known that when there is no consideration, it is deemed to be a supply, but there they are given a proviso to the second entry by saying, employer-employee, schedule 3 says any payment by the employer to the employee, not a supply, but come to schedule 1, if there is going to be any gift given to an employee in excess of rupees 50,000, in a year, it will come under Schedule 1. So for example, I love my employee, I give him a Indica car at the end of the year. Some Surat businessman did 2 years ago. Indica car, jewels, everything. Now he may think twice before doing that, because GST is also applicable on that, apart from perquisite related taxation. Reason being, anything given more than 50,000 rupees in a year as a gift to an employee by an employer. Schedule 1 says it is deemed a supply, tax affordable. So to my own employee, I give it free, I am liable to pay GST on that, and I cannot put up a question there saying, sir, I will do it at the price at which we decide to do. Not possible, you are a related party under section 15. Employer and employee is related. How is it going to impact me? 3-year-old laptop given to the employee, department might come and poke their nose and say, sir, I cannot take your selling price. I will have to find out the open market value of this laptop. Book value is 1 rupee, you give it at 2 rupees and say 100% profit. No. Open market value is 17,000 rupees. Please pay GST on 17,000. For a software company, after 3 years, literally Companies Act depreciation would have made it 0. But they would still have to pay that GST burden because employer-employee relationship is considered to be a related party transaction. At this juncture, I just want to detour and discuss about the Kerala Authority for Advance Ruling Order also, because it has a connectivity here. Vehicle pickup and drop given to employees at a subsidized rate. Food given to employees either at a subsidized rate or at 0. Is there a supply? Now this question was posted before Kerala Authority for Advance Ruling. The question was only half. That means they didn't ask about no money being charged. They asked only about a situation where I am buying food at 100 rupees but giving to my employer 20 rupees. Subsidized. Which means at the end of the month I will collect a 20 into say 30 days, 600 rupees from him, but I would have incurred 6,000 rupees for him. This 600 rupees collected, am I liable to pay GST? Nonchalant answer, yes, it is a supply. You are liable to pay GST. But what they did was, they didn't even go beyond that. They have said it is a supply, you are liable to pay GST. One good thing, Authority for Advance Ruling Order is applicable only on the assessee and the assessing officer, not on us. So we need not be worried in the first place. But general tendency is when we get such forwards in WhatsApp, one place where we should not learn GST is WhatsApp. Second one is Google. You will get some opinion. One of my clients came to me, sir, Google search this is what it said. Good, take a second opinion from Yahoo. Don't come to me. If you really want to know what is there in the law, then you should come to me. Not somebody who is writing somewhere. He might be right also. How would you know every fact of yours is matching with that? Now this Authority for Advance Ruling Order, I don't know with what mindset they went to them. It has actually become in old stories they used to say, they wanted to get a boon. It became a bane. When they went and asked, sir, is it taxable? They said, yeah, taxable, pay. Now question is, on what value I am liable to pay? On this 20 rupees or the 100 rupees? Employer and employee are related person. You are liable to pay GST on 100 rupees. That is the interesting thing, because employer and employee is related party, so I will not accept your transaction value. I will take only the market value, open market value. What is the open market value? Kalayla vaangana food open market value na vaangana price na. So I will say open market value is that. Pay GST on that. So this is how all the employee related transactions will end up paying full GST. You cannot say I will pay on this money recovered. Cab, bus facility given to employees where you take some recovery. Everything will follow suit in this. Okay, moving further. Any person directly or indirectly owns, controls or holds 25% or more of the outstanding voting stock or shares or both of them. Basically 25% holding in any which ways you have in either one's business, you are considered to be a related party. So they are not stretching it to 51% and all. It is 25, that is enough. And one of them directly or indirectly controls the other. Now for that there is no mechanism or numbers attached to it. Directly or indirectly controls the other. I do not know, I think every husband and wife relationship will fall within that. Either directly or indirectly controls the other, you will say it is a related party transaction. And then, both of them are directly or indirectly controlled by a third person, maybe by the kid, I don't know. Both of them are directly or indirectly controlled by a third person. I think generally it will come under the common subsidiary or a common holding company. Together they directly control a third person is common subsidiary. or a joint venture, two of the companies come together, a joint venture is formed, that joint venture will come under this category. They are members of same family. Now only they are talking about people. So far they were talking about only legal relationships. And the person also includes legal persons. The last one, point number C, is the key in which transaction, once I read it out I will tell you, persons who are associated in the business of one another, in that one is the sole agent or sole distributor or sole concessionaire, however described of the other, shall be deemed to be related. Many of the people are yet to decipher what they are meaning here. Sole agent, okay sir, sole selling agent, done it, easy. It is not equal to excise sole selling agent. Let's take a simple example but most complicated transaction, joint development agreement. Landowner gives it to the builder. Now, is my builder not my sole selling agent? I sell apartments, but I sell only through him. Sir, how can you say he is my agent? Okay, sole concessionaire. Can somebody enter into that building and say, sir, construction my apartment I will do with a third party builder? If it is going to be a 3 ground land, he is constructing 24 apartments, he only can construct 24 apartments. So, the transaction value between the landlord and the builder will not be taken. Department will go for open market valuation. Because you are considered to be related party. How am I related? Sole concessionaire. You are sole agent, or landlord share, I can sell only through. For the builder's perspective, landlord is the only agent or through whom he can sell. So both the ways, people are stuck inside this relationship, which is why I said sole agent is a common word, but it has got wide ramifications in GST because it includes the joint development agreements also. And distinct person is something which we have already discussed, being a person who is registered in different states, though you are come under the same PAN, same SIN, corporate identification number. For the purpose of GST, more than one registration means every registration is a distinct person. Can I have more than one registration within the same state? Possible. If you are having different lines of business, verticals, you can get registered more than once. But the sad part is, even a stock transfer between these two entities or these two GST registered entities within the same state is considered to be a supply. You are liable to pay GST because distinct persons. So transaction value is the value of supply, which is the price paid or payable when the supplier and recipient is not related and price is the sole consideration. So this is the basic rule, or I would say, though it is a section, the rule in valuation is you should not be related and price must be the only consideration. What all should form part of the taxable value? How to easily remember, though I have put a lot of circles around there. Post lunch time you can remember this easily. Keep the word, the nut called pista in your memory. That will help you understand what all are includable. How to connect it, moment I finish this you will know. So incidental expenses for the purpose of doing the transaction shall form part of the taxable value, which means incidental freight, incidental loading, incidental packing, incidental transportation, anything I do will form part of the value of supply. Now this has to be immediately connected to section 2 subsection 30, composite supply. When I am doing a supply where there is a principal supply and the things are naturally bundled, then it has to be taxed at the rate at which the principal supply is taxable, and the value will be, your incidental expenses are also included. On the total value only you will be paying GST. For example, I am shipping a 28% goods to you. I have agreed to take care of the loading, unloading and the insurance and the freight also. The insurance, freight, loading and unloading, which would have normally become taxable only at 18%, because it is a composite supply, will become taxable at 28%. One, it is included in the taxable value. Two, section 8 guides that in case of a composite supply, the taxability is based upon the tax rate of the principal supply. And interest or late fees or penalty, one another interesting inclusion. This interest, I have to give a disclaimer, this interest has got no connection with deposit interest. What the interest that they are talking about here is delay in payment. in accountancy when we started, no, we would have done one chapter called ADD, Accounting Due Date, where we will calculate it is payable within 30 days. If it is not paid within 30 days, for every 1 day we will have to calculate some interest. Interest at the rate of 36% is payable for any delay beyond 30 days. We would have said in the invoice. So beyond 30 days we take 3 days extra. 3 days interest we will calculate, average due date and all we will do. That interest is what they are talking about here. That interest is taxable under GST. People are forgetting that or conveniently thinking that interest has got an exemption under notification 12/2017. Interest is not taxable. No. Interest as a consideration for giving money is only exempted. Interest is not a consideration here for giving money. I am not giving you an advance for which you are giving an interest. I have given you goods or I have given you service which you are not paid within the time limit. Hence I am asking you to pay interest. That interest is taxable and it is taxable along with the transaction value. Which invoice I am going to ask you to pay interest, and the invoice whatever rate was there, to that rate it has to be added. Late fees is similar or any penalty I levy is also similar, but the good thing what they have said is club this everything, raise a debit note. Why would I raise a debit note? Because there is an increase, but that increase is not because of the transaction, because of the adjustment that I am going to do. But section 34 says whenever there is a change in the taxable value or tax value, you cannot issue anything called supplementary invoice as we used to do earlier. Nowadays we should issue only a debit note. So I am issuing a debit note. In this debit note I am supposed to charge GST. The good thing which I told was, for that debit note, the time of supply, when you should have paid GST, you are charging debit note, you are charging GST. On the GST when I should pay. For the debit note, the time of supply is the date on which the debit note is raised. So I have done the transaction in January 2018. The payment is received today with the interest, with the penalty. I raised a debit note only yesterday, indicating to the fellow that you don't have to pay me only the basic value, you have to pay me more. Yesterday is the time of supply, which means I will pay it only along with the June month's due to the department, no interest to be paid. But on the other hand, if there is going to be a retrospective price increase, where I am giving you a debit note for price increase, sadly for that, the time of supply for that debit note is still the invoice date. Invoice had been raised in July 2017. The debit note, retrospective price increase debit note is being given today. July 2017 order due date length, till today I am supposed to pay interest. Because for that debit note, the time of supply still remains the original invoice. Whereas interest, penalty, late fees associated debit note only, the time of supply is the day on which the interest, late fees or penalty related debit note is raised. This is one of the major distinction which we may have to bring about to the client when we are doing our finalization. Because all this will crop up during finalization. They will say, sir, we have received this, we are thinking that we will receive this, or since received. In all those cases, liability we will have to advise them accordingly. And then any taxes or cesses. GST is one tax which is to be levied in the last leg, which means all the other taxes and cesses will get added, finally GST. Luckily there are not many, but even if there is going to be some taxes or cesses locally levied, we'll have to add it and then only calculate GST. Any kind of subsidies directly linked with the price, excluding subsidies given by government. In Tamil Nadu we have a straight case in our hand. Women scooter subsidy. The government is giving 25,000 rupees. If I go and buy a, let's say TVS Vigo, 55,000 rupees. On that I will have to pay GST. If the same scooter is purchased under the government women vehicle scheme, government is giving 25,000 rupees subsidy on behalf of my wife to the TVS company. They will charge me GST only on 30,000 rupees, which is 55 minus 25 given by the government. They should not charge GST on 55, but it is only government subsidy which can get removed like this. If it is going to be anybody else's subsidy, for example, I am the holding company making it easy for my subsidiary by giving some loan to another company who is the supplier to my subsidiary. So with using this loan, that fellow is taking care of his working capital requirement. So he is giving it at a lower price to my subsidiary, that amount is treated as subsidy and it will be added to the valuation. Only if it is government subsidy, it can get deducted. All other subsidies will have to get added and on that GST has to be paid. Any amount which is liable to be paid by the supplier if it is paid by the recipient. The straightaway example is FOC supplies by the recipient. For example, I am, let's say, India Cements. I want to construct a 10-story building for my new office. Obviously, India Cements building you are going to construct, who will supply cement? I will only supply my own cement. So, the builder, I would have entered into a contract saying, cement is my scope, rest all is your scope. Now, department says, perfect, you do that, but GST has to be paid on the total value that you have to pay to the builder plus value of cement. Why? I am not asking him to pay for that. No. He is a builder only if he uses cement. That cement which he is supposed to use, you didn't let him buy. What you did is, you gave it. Which means the supplier of the service should have incurred this expense, which you didn't allow him to incur. You have given the money to him, or you have given the goods to him with which he can supply the goods. Which means FOC, free of cost supplies, given by a recipient for the purpose of my own supply, will get added to the taxable value. And recently, a week back, department has clarified in case of automobile industry, amortization of tooling cost or die cost. Tools will be developed by the job worker. The job worker will use the same tool for supplying to me job work products. What companies will invariably do is, they will ask the job worker, once he develops the tool, to invoice the tool to them. Which means the job worker will have a moral responsibility that it is not his tool, it is that person's tool which he is holding only for the purpose of doing the stamping or job working. In that case, in excise, there was a clear ruling that if the cost of this item has to be amortized over a number of items that it can manufacture, and that has to be added to the assessable value every time. But luckily in GST, no such provision is there, and it has been clarified by the department also. If the tool is not within the scope of the job worker, this need not be added, is what they have said. Because if it is in the scope of the job worker, the supplier should have made it ready. Instead, I give him the tool, then it is includable because of this inclusion. So together, all this make up the value of supply. Now, we have seen the inclusions that need to be made to the supply value. The next step is, what is the exclusion that is allowed from the value of supply. The exclusion, only exclusion that is given to be done from the value of supply is discount. We may also call it as incentive. Now, discount again, we will have to dwell a little deeper and understand there are two kinds of discount that is being contemplated. One, discount given at the time of supply. Two, discount given post supply. If I am giving discount at the time of supply, it doesn't matter whether we had an agreement earlier or not. The discount value is directly deductible from the assessable value. Remaining is only taxable. So in GST you would have seen in the last 1 year, all the festive season, nobody put up a board saying buy one get one free. Because if you buy one get one free, that means the second item that they are giving is given free. If something is given free, ITC is not allowed. Section 17 subsection 5 says if you give something free, input tax credit not allowed. So people became intelligent. They said buy two at the price of one. So what I will do is, I will charge 999 for one trouser, two trousers 999, 999, 1998 less 50% discount. I will still get away by taxing only 999. How? Because discount given at the time of supply, it doesn't matter whether it was earlier agreed or not, is allowed as a deduction. The taxable value is only after the discount. Whereas on the other hand, if any discount or incentive or reduction in price is given after supply, post supply, there is a requirement. The requirement is, one, it must have been agreed even before the supply. Now again, when we are doing our audits, we may have to look at, have they really agreed earlier? So what could be the ideal documentation? The ideal documentation is an agreement, which we can say even a purchase order is an agreement only. Both of us are signing, somebody is giving, we are signing. That purchase order, if it contains a standard two-liners saying, you may be entitled for discount anywhere between 10% to 23% based upon the turnover that you are doing with me during the year. Enough. That is considered to be an agreement. But even that is not there. There is no agreement before making the supply that you might be entitled for such a reduction in price at a later point of time. That discount, you cannot reduce your GST liability. Which means I would have supplied to you at 100. We subsequently agreed that it is not 100, it is 18, sorry, it is only 90. When I supplied to you at 100, I would have given you invoice for 100 plus 18% GST. Now I will have to give you a credit note. When I give a credit note, I will give for 10 rupees to make the basic price to 90. But can I charge GST on that? Because by charging GST on the 10 rupees, I am actually doing a help for myself. Why? Because on the 10 if I charge GST, 1 rupee 80 paise will become a reduction of my liability in the current month. I don't have to pay that 1 rupee 80 paise. I can reduce it from the current month liability, pay only the remaining. But that cannot happen if it had not been agreed earlier. It must be agreed earlier, only then this can happen. So this is the critical thing about discount. Discount is allowable as a deduction, yes, two scenarios, given at the time of supply, given post supply. At the time of supply, no questions asked, allowed. Post supply, it must have been agreed beforehand, then only it can be given, else it cannot be given. And the sub condition that comes along with it is, if I am giving a credit note and I am saying I will charge GST on that 1 rupee 80 paise on the 10 paise, that means my buyer who would have taken credit based upon my initial invoice, which is 18 rupees ITC, he should reverse 1 rupee 80 paise and his net ITC will be 16 rupee 20 paise. So two conditions. If he doesn't reverse ITC, I will not get the reduction in tax liability. So we have to tell all our customers, if I give a credit note, please confirm to me, should I charge GST on the credit note or not? Because if I charge, you will have to reverse. Are you prepared to reverse? If you will not reverse, I will give only 10 rupee discount. I will not give 11 rupee 80 paise. This we should agree with the customer. Now done with section 15, we'll have to look at the rules, as I said, which deal with valuation. Starting with rule 27, we'll be going through all the other rules. The only section which was dealing with valuation is done, understood. So rule 27 deals with what scenario? The value of supply where the consideration is not wholly in money. There is a transaction, there is a consideration, but the consideration is fully not in money. There seems to be some other consideration. The most common example could be our mobile phone purchase. If I buy a 35,000 rupees worth of mobile phone, first thing I will ask is, will you take this? So I will give him this 5,000 rupees worth of mobile phone. He will say, okay sir, 35,000 rupees less exchange, 5,000 and remaining only 30,000 rupees he will say. But the problem in GST is, exchange is also a supply. So if I give something for exchange, still GST is applicable on it. And it will get very, very, very complicated in case of specific industries. Example, tire. Apollos and MRFs will take old tires for retreading. So the person who has a huge lorry will go and say, replace my tire. And immediately the company will say, I will replace, can you give the old tire? I will give you the new tire at a reduced price. Battery. Starting from car battery to inverter battery. You go and tell them, sir, give me the old battery is what he will ask. That old battery he will say, I will give you some discount. Old battery cannot be given as discount in case of an organization because you are exchanging. Your value of consideration is not only money. I am not giving you only 30,000 rupees. I gave you 30,000 rupees plus 5,000 rupees worth of old mobile. It is an individual, there is no issue. But if it is going to be an organization which is giving an old car and buying a new car, for supplying of the old car, they will not raise an invoice. Because you are a taxable person. You are supposed to levy GST on that. Then he has to give an invoice for the full value. He cannot give for the net value. Because you will do the accounting for this invoice as receivable, that invoice as payable, net only you will pay to him. This we will have to see whether people are doing it in their books. If they are not doing, we may have to advise them to do, because exchange technically, barter technically is a supply, and that will directly impact your sole consideration. Price may not be the sole consideration. Then you have to come to rule 27 and say how to do the valuation. It gives the option. One thing good about Rule 27, 28, 29, 30 is, it is equally bad. So we need not remember these 4 rules separately. All of them are equally bad. What they want to do is, first thing, take open market value over. Sir, where will you go for open market value? That's home prachana. Let's take an example in our own case. I am doing a tax audit for my brother. I am also doing tax audit for other people. For my brother, I say, nothing. 1 filter coffee is enough. Done. Now department will say, no, you did service, no? Yeah, you did to a related person, no? Yeah, pay GST. Then I'll ask them, what value? Open market value. Sir, brother to brother open market value, where will you find? No, similar audit, who had charged how much? You find out for something and come to me. Maybe a big 4 would have charged 3.5 lakhs to 7 lakhs. They will say, take that 7 lakhs. Sir, one another charge over is doing for 25,000. No, open market value means I will take only whichever is beneficial for me. Why should I take 25,000 rupees fellow? I will take 7 lakhs fellow. On 7 lakhs you pay GST. I am brother, this kind of transactions can happen. So, open market value, as I said, equally bad. Think about the open market value. I think we have already been pushed to the brim in case of 92E transfer pricing. Go and find a Kappu method, CP, all that we are doing there. Now in indirect tax we are asked to do the transfer pricing, open market value. Sir, open market value fails, I am not able to find out. Then come to the second option. Sum total of consideration equivalent in money and any such further amount in money as is equivalent to consideration not in money. No, 35,000 rupees in my example. 30,000 rupees is given in money, 5,000 rupees is given in kind. Take both. 35,000 rupees is the taxable value. That is what they are telling here. If that is also not working, what should I do? Rule 30 and 31, in that order only we have to go. What is Rule 30 saying? Rule 30 is saying take 110% of cost of production or cost of manufacturing or the cost of acquisition of such goods. So if you are a trader, then what you will take? In case of a trader, take 110% of cost of acquisition or cost of provision of service. This gets even more complicated. Cost of provision of service, cost of production of, there is a cost accounting standard. At least I can start with prime cost, factory overheads, cost of providing service, gone. For chartered accountant office, imagine. We will have to sit and calculate and we may have to do, if price is not the sole consideration. So the best thing is get everything as in terms of money. And what they have suggested is residual method is Rule 31. If all this doesn't work, we have to go to Rule 31. The best part about the rule, as I told you earlier, is you have to apply chronologically only. 27 fails, 28, 28 fails, 29, 29 fails, 30. 30 fails, 31. That is the last one. So we will have to go in this chronological order, which is very similar to customs valuation rules. Customs valuation, this is what they will do. Starting from Rule 4, price of identical goods. If that is not available, take price of similar goods. If that is not available, go by computed value method. If that is not available, go by deductive value method. If that is not available, best judgment. So that is where the sequence has been picked up from in GST also. So moving further, what if the value of supply of goods is between the distinct and related person? So we saw the first condition being breached, the condition being price is not the sole consideration. Then which rule I have to go? Rule 27. If both of us are related, then you need not even worry about price. Directly come to Rule 28. Rule 28, what is it saying? Same method. Start with open market value. Oh, I should do open market value. Yes. Now imagine all those banks who are the victims of this rule as well as section 15. I am taking a simple demand draft for CA Institute in Nungambakam branch, 1000 rupees plus 30 rupees commission plus GST on the 30 rupees. Now this is payable in New Delhi. Now this poor fellow branch will have to share the 30 rupees commission with the New Delhi branch. Why? Because New Delhi is registered separately, Tamil Nadu is registered separately. This is inter-distinct person supply, you are liable to pay GST. At what value I will pay GST? Open market value. Sir, open market value nana fix panna. Then fine. On that you split the revenue and pay GST. That is how absurd it is, but it has to be followed because not just within the state's supply of goods, within the state supply of service is also taxable under GST. Now we get deeper and deeper into costing, not into GST. So one person was saying, sir, IST, how do I distribute, sir? Can I distribute by square feet? I was like, square feet? Why you arrived at square feet? Whenever rent is to be distributed, you have to distribute in square feet. So he was thinking like that. Then I realized, oh, GST is slowly making people costing experts. It is not converting people into law experts. You have to be careful, but still, this is there. So inter-office supply, whether it is goods or service, intra, I should say, within the office, but across states, we may have to pay GST on that service also when it is done by us. If you pay GST also, department will still come to your office and say, the value is not correct. Why? Because you are a related party, no? I have a right to question. Then what should I do? Go and take open market value. Where is open market value? So that is where we will end up. It will be a cycle. If open market value is not available, what should I do? Value of similar kind and quality. If I have done to a third party, that value I can hold out to the department as, or can I adopt this value? So we are at the mercy of the officer when it comes to valuation and assessment. The third option, like I said, rule 30 and 31, they say the same thing. Tape recorder money, it will say 110% you take. Rule 30. Rule 31, generally accepted accounting principles study. So which is the last method. You somehow arrive at something, no? And take it as value. I don't think department officers will allow 31. Maybe 30 can happen. Where we will also have a say in terms of telling the department, sir, we have adopted some scientific method for arriving at 110%. So we have not plucked the numbers from air. And the next one is rule 29, which comes into play when value of supply made or received through an agent. So before we get to that, in rule 28, there are two provisos. The provisos have been given in a different format here. The proviso 1 is very critical. If the supply is going to happen between two related parties, the goods which are being supplied, it is applicable only for goods. The goods which are being supplied to that related party is going to be supplied as such by that party to the third person. Best example, FMCG. Nestle has its manufacturing facility in Maharashtra. From Maharashtra, he is going to transfer all his products to Nestle Chennai. And from Nestle Chennai, it will go to the third party, who is the wholesaler, might go as billing. Now, Nestle, whatever he transfers from Maharashtra to Tamil Nadu, is not going to change in terms of supply to the third party. It is going to be supplied as such to the third party. Then there is a restriction. The restriction is the value at which Maharashtra invoices Chennai cannot be lesser than 90% of the value at which Chennai will sell to a third party. It means in the pack it is put as 450 rupees. I will sell this at 450 only to my customer. Then from Maharashtra it should have come not lesser than 90% of 450. Minimum he should have invoiced me 405. He cannot say, I will invoice you at 300. You are me and you are same company only, no? I will invoice at 300. Upon Chennai, when you sell, you put it at 450. No. When Maharashtra invoices to Chennai itself, not less than 90% of the value they will have to adopt. But the good thing is, this is applicable only for goods, and second is only if the goods are supplied as such. That means, apadiye I have to give it to somebody. What is the other scenario that is possible, which I already hinted? When I am supplying to a person who is in Gujarat, who is my branch, he will not supply as such. He will do some value addition, complete it into a finished product. In those cases, they are given a second proviso. It is provided further that if the price at which it is being sent, other than as such scenario, the value that you put in the invoice will be treated as assembled value. So we don't have to revisit that, because in this case, you might be sending a WIP item. Where is the possibility of finding out what is the open market value of the WIP item, or what is the value at which it is sold to a third party? Because it is never sold as such to a third party. So what I can do is, whatever price you put in the invoice, they say as long as the other party is eligible for input tax credit. I am giving it to my Gujarat unit. Gujarat unit is eligible for ITC, then there is no issues. You can transfer at your price. But this is applicable only if that transfer, supply between two related party is not supplied as such to a third party. If it is supplied as such, we'll have to go by minimum 90%. Now this has created actually a huge accumulation of input tax credit in case of all the FMCG companies. You might also encounter in your audits. For example, I am only a distributor in Bangalore, expecting goods from Chennai. I am sending him goods left, right and center from Chennai for pushing it into the market. The product worth is 100 rupees. I am charging 90 rupees because that is what is minimum expected to be charged. So he will sell it at 100. Now the problem is, he gets input tax credit on that 90 from me. Plus, he has put up a warehouse there. That rent is there. He has got a GST consultant there. That input tax credit is there. He has got the distribution channel. That input credit is there. All that input credit plus my goods input credit, his input credit is more than his output liability. Because government is saying you should not have a margin of more than 10. But my margin actually is more by selling through my Bangalore unit. But it so happens, if your margin is more, still you will end up at a loss. Why? Because that additional input tax credit that you accumulate, you cannot get it as refund. இங்கே 90% நான் ட்ரான்ஸ்ஃபர் பண்ணிட்டேன் என்னுடைய goods. He gets 90% input tax credit. அது அவர் 100 rupees தான் விற்க போறார். So 90 rupees when I transfer, 18 rupees GST, 16 rupees 20 paise, he will get input tax credit. He is supposed to sell it at 100. 18 rupees he is supposed to collect and pay. Set off this input tax credit, sir, 1 rupee 80 paise he has to pay from pocket. But he has already got 5 rupees 60 paise ITC. So every month he doesn't have to pay. What he has to do is only set off. But what will also happen at the same time is accumulation of ITC in his current asset. And if it is not eligible for refund, we may have to take a call, write it down to P&L. Because this is a current asset which is accumulated, we cannot get it as refund. Then what should I advise? Can you carry it perpetually so that he starts another business there, uses this input tax credit? Quite far-fetched idea. So we may have to again think in terms of locking of such working capital there. Rule 29, when the supply is made or received through an agent. So 28 talks about only through a related distinct person, whereas agent is not a related distinct person, he is kept separately. But the logic here remains the same. In case you are supplying through an agent, take the open market value. If that is not available, 90% of the price charged by the agent to the third party, that shall be your taxable value. Now imagine here,